recently have raised concerns that this protection has enabled the spread of fake news as well as offensive content. So the internet companies are lobbying to include this new immunity that's helped them in the new trade agreement. But if Nancy Pelosi succeeds in stripping it out, it could be a key first step in removing that legal shield here.
So it's in there now, but
yes.
But Speaker Pelosi would like to see it go, which would be a real precedent, wouldn't it?
It would be a real precedent. I think it's one of these things that this has been talked about by regulators for a while now, particularly over the past year. There have been a lot of questions about, the live stream shooting on Facebook, whether YouTube is adequately pulling down offensive content. And the thing that has protected these platforms during all of these scandals over the content that they're serving and that they're distributing is Section 230. Now, remember, Tyler, that the TV networks, the broadcasters, they're held to a very different standard. And if you removed Section 230, then it would hold the internet companies to the same standard as other content distributors. So it would really be a very big deal. Yes.
All right, Julia, have a great weekend. Thanks very much.
You too, Tyler.
Good to see you. Coming up, it's a perfect storm of record online shopping and China turning away our trash. It was one of the big imports from the United States, but there are companies that are benefiting now from America's cardboard crisis. The CEO of Republic Services, the stock up 23% this year, will join us live. Plus, Nordstrom taking a cue from ant colonies. Yes, ant colonies for faster delivery. We'll tell you how they're doing it ahead.
Deeper data at CNBC. November rail traffic fell 7.5% versus the same month last year. Year to date, rail carloads in 2019 are down from last year's levels 4.6%.
At Amazon this Christmas, there's still time to find great gifts for those final names on your list. Like the Echo Dot, Sennheiser Momentum headphones, and the Philips Sonicare Diamond Clean toothbrush, all with low prices. So there'll be more, and more.
You shouldn't have.
Amazon, delivering all you need for less.
Christmas, a time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
It's College Football Conference Championship Weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the College Football Playoff. Catch all the action on TuneIn. Search College Football to find your game. Ho, ho, ho! Want to make Santa's job a whole lot easier this year? TuneIn Premium is the gift your loved ones can enjoy all year long. Featuring commercial-free news from MSNBC, Fox, CNN, and CNBC, plus music, podcasts, and live sports. TuneIn Premium brings the best audio to you. Forget the stocking. And stuff their phone with the Everything Audio app. Search Premium to upgrade today.
Welcome back, everybody, to the exchange. Markets still in rally mode big time following a blockbuster jobs report early today. The Dow now on pace for the largest one-day gain since early October. And here are some of the movers at this hour. Ulta shares continuing to move up on the back of strong earnings, up more than 13% right now and on pace for their best day in, get this, 3 years, since March of 2016, more than 3 years. Shares of Tesla up 2% after Morgan Stanley raised its bull case price target on that stock from $440 to $500. This based on the potential of the new Cybertruck and a more optimistic scenario over in China. Apple up 2% and hitting an all-time intraday high today. It is now positive for the week and on pace for its 10th positive week out of the last 11. Take that streak anytime. Now to Sue Herrera for a CNBC News update. Hi, Sue.
Hello, Ty. Hello, everyone. Here's what's happening at this hour. 4 people, including the shooter, were killed and 7 others injured in an attack at the Pensacola Naval Air Base in Florida. A U.S. official says the suspect was an aviation student from Saudi Arabia, and authorities are now investigating if the event was terrorism related.
We're a military town. Our hearts and prayers are connected to all those that serve us every day. And certainly the expectation that this would happen here at home was unexpected. But I can tell you that all of our sympathies are with the men and women who are out here on this base.
The Navy sailor who fatally shot 2 people at Pearl Harbor before then killing himself was unhappy with his commanders and had been undergoing counseling. The sailor, G. Romero, also faced non-judicial punishment for minor misconduct. More than 140,000 people around the world died from measles last year. That's according to the World Health Organization and the CDC. The majority of those deaths were among children under the age of 5. There were nearly 10 million total cases, a 170% increase since 2016. You are up to date. That's the news update this hour. Ty, back to you.
I think the sickest I ever was, Sue, was when I had measles when I was about 7 years old.
Really? When you were young?
I was
it's a terrible disease.
Before they had the, shows you how old I am, before they had the inoculations against it.
Well, you're lucky you survived, and we've got you.
Yeah, good stuff. Thanks, Sue.
Mm-hmm.
All right, here's what else is coming up on the exchange.
Ahead, Uber voluntarily publishes safety issues at the company, and some say that's a good thing. One digital bank has quadrupled its valuation in less than a year. And the under-the-radar way to play the online shopping boom. It's all coming up on the exchange.
Tomorrow. I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations: strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff: hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
How many tours till Christmas? You know it's not far off when the Advent calendar goes up. At Asda, we've a great range to choose from, including Maltesers and Galaxy calendars for just £2 each. And our Asda Free From Advent calendar, just £2.50. Asda, let's make Christmas extra special. Selected stores subject to availability, 93 grams to 110 grams.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile, every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Catch you up, on a few stories that should be on your radar. It is time for Rapid Fire. Here to break down the headlines, Robert Frank, Meg Terrell, and Bill Griffith. First is Uber releasing its long-awaited safety report. It is the first of its kind from a gig economy company, and the details are disturbing. Deirdre Bosa has those details, and they really are chilling, Deirdre.
Yeah, they absolutely are. Let me give you a few of the highlights. 515 incidents of rape or attempted rape last year. 9 people murdered, 58 people killed in crashes. Now, over the full 2 years that it tracked these incidents, nearly 6,000 reports of sexual abuse. But let us show you another screen because this is really, really difficult to put into context. These numbers are grim. They're appalling, but we really don't have a lot to compare them to. Tyler, you said that first of its kind from a gig economy company, but really this is the first of its kind in many ways. We don't have even a taxi company's numbers to compare them to. We do have the national average of traffic accidents and fatalities, for example, and it is much lower. But what this really tells us is there's so much we don't know about what these gig economy platforms are doing. Uber rose to ascendance by letting almost anyone with a car get on the platform. Now they have to police it. Now they have to make sure that the background checks are adequate enough. And I brought this to show you guys. Actually, our intern searched far and wide for physical newspapers. This is the Wall Street Journal. Uber taking out a bunch of advertisements in newspapers across the country. This is the San Francisco Chronicle, and here's the New York Times. It's in many others. 100% committed, and I think that's what they're really trying to demonstrate with this report.
They say in those ads, and my notes indicate 3 to 4 million individual trips a day within their system. Mm-hmm. So it is
3 billion, isn't it?
3 to 4 million trips per day.
Per day. I thought it was worldwide. I thought it was 3 billion. No?
So it's 2.3 billion rides completed during the 2 trips. That is a certain number of million every day. This is an enormous amount. So these numbers, yes, they're extremely high. They're extremely grim. But as a percentage of the trips that Uber has taken, they represent 0.002%.
But tell that to the 6,000 people who were sexually assaulted. By my math, over that 2-year period, that is more than 8 assaults a day. Tell me another business that where their customers are sexually assaulted, 8 of them per day, every single day.
Customers, so that's drivers and customers together. But
we know?
Right. Either way, you're right. That's astounding. Name any other business.
Deirdre points out, we just don't know other companies.
That's right.
Taxis don't put out statistics as well.
It does seem impossible to put this into context, and I think that Tony West's Uber's chief legal officer had an interesting quote to the New York Times where he said, "Uber's a reflection of the society it serves." And this is a hard conversation to have, but I think what troubled me more in reading this was that the companies, Uber and Lyft, don't have in place practices to share the findings of researching driver background checks that come up as troubling. They don't share that with the other company. They say they plan to, but they don't have a date for when they're going to do that. And when you don't have things in place that keep safety first and foremost like that, you just have to wonder, I mean, why? That's the right thing to do. It can't be a competitive advantage to say, okay, we don't share the results of troubling background checks.
I'm surprised the stock is not down more, but I think it's also, we should applaud them for releasing this, to your point, because Lyft will have to follow through now, and maybe New York taxis will have to follow through, and maybe all these other companies that people have been asking about will also have to match it.
And Robert, not just the ride-hailing companies, but gig economy platforms as a whole. We know that Airbnb has had issues with safety, but I think that the next question to ask here is what happens to accountability. Uber, remember, at the end of the day, says that it's just a platform. Its drivers are freelance contractors. So are they actually going to be held accountable for these incidents? Remember, there was a Washington Post article a few months ago saying that those that act for Uber are trying to make sure that they don't also pick up liability for these incidents. Is that going to start happening? So in that sense, this is a big step forward, and it really does expose Uber to a lot more steps to follow.
And they should be held liable. Come on.
Yeah.
I mean, who cares if they're contract employees? They're part of the platform.
Yeah, I'm not going to draw that distinction.
They should be held liable.
Yeah, if someone here is a contractor as opposed to, they're still here.
Exactly.
They're an employee of this company. Deirdre, thank you very much, Deirdre Bosa. All right, let's move on. Popeyes, this is a lot lighter topic. Popeyes and chicken.
What a turn you're making.
Lightly battered.
Yeah, lightly. I better watch out. McDonald's is expected to enter the chicken sandwich wars with its own offering starting next year. The fast food giant's crispy chicken sandwich and biscuit has Telsey Advisory Group's Bob Darrington feeling peckish, and it's going to be a big hit in America. I guess we need.
What are they going to call it? That's the most important thing. McDonald's has got to have the clever name.
I don't know. But here's the interesting thing. It sounds great. They're doing a premium. They've already got a chicken sandwich. Right. This is going to be better. But they advertise it as having a full muscle chicken breast. What are we getting otherwise?
Yeah.
And then are these chickens that are like bench pressing all day, or what is a full muscle chicken breast?
Aren't they the origin of the old saying, parts is parts? So who cares what part you were getting? You know, I've been long a fan of the Wendy's spicy chicken burger, chicken sandwich, which is terrific. And you're seeing this more and more. The Popeyes chicken sandwich has been incredibly popular. And, of course, we've got the one that says "Eat more chicken."
Chick-fil-A.
Yeah,
Chick-fil-A is really who they're going at.
I think we're heading into a golden age now of chicken sandwiches.
A golden age
of that, and of the social media around it. I mean, it was really the Twitter wars that led to the chicken wars moniker here. And I think Bob Darrington, in this 15-page research note about chicken sandwiches, which I did not expect to be reading this morning when I came to work, he said he's looking forward to seeing McDonald's buff up yo tweets. That is in this Wall Street research note.
Is that right? Okay, yes. Good. Well, we'll have to have a taste off.
Yes,
let's do that when it comes out. I don't think it's out yet, right? This new.
It's being tested in 2 markets.
Tested in Nashville and Houston or someplace like that, where it probably did pretty well. Telsey Advisory Group's Bob Darrington will be on Power Lunch shortly. We will have him recite all 15 pages of that research report about the chicken fight for dominance over the chicken sandwich market. All right, let's move on. You ready for some mind-boggling numbers? Digital bank Chime has quadrupled its valuation in less than a year. The startup now worth $5.8 billion, raising plenty of capital after a rough year for the IPO pipeline. This is I guess a non-bank bank, right?
Yeah, it's one of those fintech banks that doesn't have any brick and mortar, and in many ways, I think it's the future. Obviously, it attracts millennials. That is their method. If you can do all your banking on your iPhone, I think that's the way to go. And there have been some winners and some losers in that category, and Chime seems to be the one that's emerging right now.
It's 20 times revenue in terms of valuation, so you really have to expect a lot out of this company. You also wonder, in a downturn, here's a company that's offering free checking, no overdraft, early direct deposits, so they're making it super attractive to take cheap capital from investors and buy customers for now, but over time, are those going to be good, profitable banking customers? That's going to be the big question.
FDIC protection and the whole thing comes with it, right?
Well, if they've got a bank charter, then it has to.
It has to be. You have to have it.
I think the business model of the future is going to be they're going to have some brick and mortar somewhere. You know, when there's a power outage of some kind, or if the servers go down.
Yeah, when they had outages, they had 3 since July where people were stuck without being able to use their cards.
How much do you folks use mobile banking apps? Do you use them at all?
Yeah, sure.
Yeah. Deposit checks with them?
Yeah.
The whole thing?
Absolutely.
I do too. Do it all the time. Yeah. Love it. Absolutely love it.
Even baby boomers do this, apparently.
Yeah, even us, old fossils like us.
When's the last time you walked into your bank?
I walk up to the bank and use the ATM, but I have not been inside the bank.
When's the last time you were inside a bank?
I had to take out a big check to buy something very large about a year ago.
Oh, yeah, a year ago. So, why do you need brick and mortar?
Really interestingly, though, I think what this says more broadly is that companies like this, some companies like this are still able to do these really large funding rounds. In this sort of post-WeWork time, some companies can still raise $500 million, as our Hugh Sun reported on CNBC.com. I mean, it is pretty interesting and pretty reflective that
valuation.
Some companies
for such
can
a
still
young
do
company.
it. Yeah.
I think I chewed gum more than I went into a bank.
I think that's true. I think the last time I was in there,
Was it vitamin B gum?
Vitamin B gum.
it wasn't really even for banking service. I went in to get something notarized, I think, is when I was in there.
You don't need a bank for that.
Yeah, you don't need a bank for that. There are people here who do.
Exactly. We got people here that do.
Ted David used to be a notary, didn't he?
Oh, now the
He's
secret's
going to
out.
call. He's going to call me.
Oh,
all
boy.
right. Nearly everything is on its way to being automated, including the way we shop. And one store is taking some of its cues from the insect world in a bid to modernize its shopping experience. CNBC.com retail reporter Lauren Thomas is going to do the beautiful walk-in right now. Lauren, come and join us. Explain what Nordstrom is doing and why.
Yeah, so if you're in retail today, you're probably trying to do one of two things, which is cut costs, obviously, and get as close to your customers as possible. So Nordstrom is the first retailer to bring together these technology from two startups, Adibotics, which actually builds these systems based on how ants store their food. So it was really cool to go out to California earlier this week. I was out there and was able to see this in action. But so Nordstrom has teamed up with Adibotics and another startup called Tompkins Robotics, which has these conveyor belts. And Nordstrom has 9 warehouses in the U.S. and it's currently testing their technology at one out in the San Jose area. And it's essentially what Nordstrom can do, the huge selling point here is they can reduce the size of their warehouse by 90%. So as you know, you cover real estate. Normally companies, to save money, they plant these warehouses out in the middle of nowhere. And then it just takes even longer to get your online order to a shopper's home. But these kind of micro fulfillment centers now can be smaller and closer to customers.
I would have, if you had given me a list of 100 retailers doing this, Nordstrom would have been the last one. I mean, Target I could see, Walmart I could see.
Low, you think low volume, higher end, right?
But I haven't thought of Nordstrom as a cutting edge kind of retailer ever.
Agreed. And I feel like in many ways, the department store sector at large, Macy's, JCPenney, Kohl's, a lot of these companies, they don't typically speak to their supply chain. And like you said, it's the Walmart and Target and Amazon and Best Buys of the world that have really been on the forefront of some of these innovations. But Nordstrom really is. I think they're making a big bet. They've told me they're doing this right now at this one center, but they plan to bring it to more down the future. And they've got these smaller format stores in LA and New York that they plan to use these
and I can see how it cuts down inventory for them. What is the benefit to the consumer?
Right.
Sure. Well, I think hopefully you'll get your order faster is key. I mean, Nordstrom now is offering same-day delivery in more markets, and it's using this center out on the West Coast. They're able to they're actually doing all of their beauty assortment there. So it's all your makeup, if you buy makeup in the West Coast, chances are it's coming from this one fulfillment center now. And the other big selling point that Nordstrom told me is they're just getting better at packing more items into one box. I think in retail right now, you hear about cardboard waste, the proliferation of that.
I'm waiting for the startup that actually stops you having to get things shipped in cardboard. Why can't we have reusable packaging that's shipped from all the stuff you order from Amazon? That's going to be huge, I hope.
I agree.
Yeah, we're going to talk more about the cardboard waste issue in a few minutes. What really excites me about Nordstrom is that they have a martini bar in the location in New York City now.
But can that be same-day delivery? That's going
to be same-hour delivery.
Well, you've got to just go there.
All right, thanks, everybody. We appreciate it. We should note that Comcast Ventures, which is a division of CNBC's parent company, is an investor in Adibotics. How about
Who knew?
Who knew that? Okay, we touch a lot of things here. The Comcast company. Folks, thank you very much. Have a great weekend.
Thank you.
Millennials are set to be the next big group of home buyers. I'm hoping to sell mine to a millennial at some point. A Brooklyn person, somebody from Brooklyn. But builders are not keeping up, apparently, behind the millennial mismatch in housing. We'll explain all of that next.
So what do you know about Captain?
So, Minister, do you really think you can lower taxes and increase funding for the NHS?
Get an in-depth look at all the parties' spending promises. From the NHS to house building, the Times and the Sunday Times will guide you through. Pick up your copy today or visit thetimes.co.uk.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
At Amazon this Christmas, there's still time to find great gifts for those final names on your list. Like the Echo Dot, Sennheiser Momentum headphones, and the Philips Sonicare Diamond Clean toothbrush. All with low prices. So there'll be more, and more.
You shouldn't have.
Amazon, delivering all you need for less.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Welcome back to the Exchange, everybody. Let's get a quick check on the markets right now. It is currently the best day for the S&P and the Dow, and for me, since October 11th. Favorite day since October 11th. All 11 S&P sectors are higher, led by energy, financials, and industrials. So, a good day all around there. Millennials are expected to be the largest single cohort of home buyers next year, but the nation's home builders apparently aren't keeping up with that demand. Diana Olick joins us from Washington. Diana, what's the story here?
Well, Tyler, while the majority of both single and multifamily home construction is in millennial-dense counties, it actually lags the rest of the nation when it comes to meeting demand. Counties with elevated millennial shares account for 62% of the entire U.S. population, but they account for just 59% of single-family home building. This, according to the National Association of Home Builders. And it's not just in urban areas either. Counties where more than a quarter of the population is millennial include big markets like California, Seattle, Boston, Portland, and D.C., but also rural counties in Ohio, Kansas, and Missouri. Multifamily construction in millennial counties, which accounts for 80% of all apartment activity nationwide, is picking up, but still slower than the national pace. All this to say that the builders are not doing enough to alleviate the nation's severe housing shortage. Tyler?
All right, Diana, stick around for a moment as we bring in Ken Leon, home builder analyst at CFRA. Ken, welcome. What's going on here, and why isn't the supply keeping up with the population or the demand among millennials for housing?
It's catching up with a great trend, which is millennials. They're 42% of the population. Median age is about 36. So for many of them, student loans is less of an issue. And once they get to 2 children, then they're looking for single-family homes. Unfortunately, the disconnect here is that they're not in convenient live, work, and play locations in urban areas. It's usually 60 miles outside of Phoenix, Arizona. And that's where land is available and where it's reasonable for a builder. So I think part of this is just a timeline situation, but millennials are coming. Many home builders have shifted their strategy, betting entirely on entry-level or first move-up with millennials.
Diana, is it a case? I mean, millennials, the popular thought is that millennials want to be in close-in urban areas, multi-use, which, as Mr. Leon points out, is the land is expensive. It's hard to build in those areas, right?
Absolutely. Yeah, but they are starting to move out into the closer in suburbs and even some of the farther out suburbs because they want more space. They want the good school districts. They're starting to have children. They're just getting to that age. It took them longer. The issue, again, is the builders' high cost for land, labor, and especially regulatory compliance when you're building closer into a city and you have a lot more zoning issues. So that's really the problem. The builders' timeline is a lot longer because of that labor shortage. So it's just a question of getting the builders to where the millennials would want to be. I would not say, though, that the millennials are all super urban. They are starting to move out.
Ken, are there any builders that are particularly well positioned with respect to the millennial population? In other words, they serve where the millennials are and what they want?
There are. And right now, also the macro, there's a ratio looking at home ownership to rental. Home ownership ratio looks very attractive. We would look to, even though they're top 10 builders, but they're mid-cap stocks, companies such as MDC Holdings, Meritage Homes, that's MDC and MTH, and then Taylor Morrison, TMHC. Very different strategies how to be in front of millennials. The first two is organically growing, as Diana says, by land acquisition. Taylor Morrison has made an acquisition of William Lyon. 85% of their book of business is entry level. So that's where you want to be. The larger builders, some will pivot theirs, others will not, simply because they're just bigger.
Ken Leon, thank you very much. Diana Olick, thank you as well. Now, Diana, go get warm, will you?
It's not that cold.
It's not that cold? All right, good. Thanks, guys. Appreciate it. Have a good weekend. Okay, so will removing a prime social media currency actually encourage users to engage more? Facebook is working to find out. We have the details next.
Who says our bank isn't?
At Lidl, we're big on the sweetest Christmas and those happily ever afters, like our winter warmer deluxe mince pie strudel at just $2.99 and our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
Ever feel bogged down by your business accounts? Say goodbye to that mountain of receipts and hello to simple solutions from Sage. We're the UK's #1 for managing finance, operations, and people, and we can support you to free up your future with smarter bookkeeping that automates repetitive tasks, dramatically reducing the time you spend typing in data. Join over 1 million British businesses who trust Sage to make it simple. Find out more at sage.com/automate.
At Amazon this Christmas, there's still time to find great gifts for those final names on your list. Like the Echo Dot, Sennheiser Momentum headphones, and the Philips Sonicare Diamond Clean toothbrush, all with low prices. So there'll be more, and more.
You shouldn't have.
Amazon, delivering all you need for less.
Everybody needs somebody.
So, what did you think of the movie, Mr. Alexander?
Oh, the cinematography, incredible, breathtaking. The movie itself was full of curious trademark themes and wonderful characteristic compositions.
Oh,
and the payoffs and character arcs were nothing short of masterful storytelling. How about you, Sergey?
For a kids' film, I thought the animals were fun.
Enjoy 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases, Tuesdays or Wednesdays, participating cinemas, 2 standard tickets only, cheapest ticket free, T's and C's apply.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today. Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
No likes, no pressure, more content. Well, that's Facebook's new hypothesis, at least. Facebook now experimenting with removing likes on Instagram to test the theory that people will post more if likes aren't counted because they won't be so self-conscious, so competitive, sources told CNBC. Instagram CEO Adam Mosseri has said in the past it wants, quote, people to worry a little bit less about how many likes they're getting and spend more time connecting. And, of course, if users are spending more time on the app, then Facebook can also sell more ads. The waste hauler Republic Services stock climbing nearly 60% over the past 3 years as online shopping becomes more and more popular and requires more and more cardboard boxes. The CEO will join us next to to talk about the Amazon effect.
At Lidl, we're big on the sweetest Christmas and those happily ever afters, like our winter warmer deluxe mince pie strudel at just $2.99 and our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price.
Subject to availability, selected stores excludes an eye.
This is so difficult.
What is, Mark?
Buying Christmas presents.
Who's it for?
Well, it's someone who has trouble unwinding in the evening and then getting up in the morning.
Yoga retreat.
Anything cheaper.
How about the new Lenovo smart clock with the Google Assistant? You can set reminders, check the weather, and it's a voice-controlled alarm clock.
Perfect.
It's only $59.99. Save yourself 20 quid.
20 quid? Well, that's my present sorted.
Make anyone's Christmas with the Lenovo smart clock at Curry's PC World.
Great music gets people moving. So here's the perfect gift for someone who's always on the go. The highly portable, special edition Bose SoundLink Mini Bluetooth speaker. Now only $149 in the Black Tag gift event at Curry's PC World. Big sound, deep bass, and 6 months free Spotify for great music right through from the Christmas party to the beach party season. Make anyone's Christmas at Curry's PC World. T's and C's apply.
We can deck the halls, the lounge, the bedrooms, the whole house.
Want to get your grotto glittering? Get to B&Q. We have 20% off all indoor and outdoor Christmas lights, artificial trees, decorations, and more. Bring the magic ho-ho home with B&Q. Offer ends 10th of December. Subject to availability. See DIY.com.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Cutting for the end. Scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
Welcome back, everybody. Online retail, of course, bigger than ever now, with Cyber Monday shoppers spending a record $9.4 billion this year. But the booming e-commerce industry, coupled with China no longer taking most of our trash, has created a recycling crisis. Our next guest is the CEO of a company that is trying to deal with this crisis and profiting along the way. In fact, his stock is up 60% in the past 3 years. Don Slager is the CEO of the leading U.S. waste management company, Republic Services. Mr. Slager, welcome. Good to have you with us.
Thank you. It's good to be here.
As with so many stories these days, all roads seem to lead to China, and China has stopped taking other countries' recyclable products for which they used to pay money. What has that then done to the price you get for the recyclable product you collect and then sell?
The market for paper goods, recycled paper, has dropped dramatically over the last several years. And it has caused somewhat of a crisis in the waste recycling business. So what we've done to respond to that is, one, we've worked harder to clean up the material, and we can talk more about that in a minute. But we've had to renegotiate contracts with customers, help them to understand that they need to kind of pay their fair share for the service, and then share in the upside of the material. So we've worked through about 35% of our contracts to date. And we're getting a lot of participation from our municipal clients across the country and trying to create a lot more awareness as to the crisis that exists and how we can resolve it and still do a good job of recycling ethically for all of our customers.
Put some numbers on the growth in the amount of corrugated cardboard that is recycled that you collect, as opposed to, say, 5 or 10 years ago. You pick the time frame. My guess is that the volume of boxes and packaging is way up versus the volume of what used to be the main recyclable product in paper, and that was newspapers, because we all know what's happened with newspaper circulation.
Well, you're right. Newspaper volume has gone down. Cardboard has gone up. It is now 13% higher component of our overall waste stream than it was, say, just under 10 years ago. And of course, in your opening, you talked about the Amazon effect. E-shopping, on-demand economy. We're seeing net, even though there may be fewer brick and mortar stores, retail stores, certainly the e-commerce has overtaken that. Recycling is the fastest growing segment of the waste stream in America.
So you mentioned a moment ago, one of the problems that you and others in your field face is that a lot of the recycled product is contaminated in one way or another. I can dispose of a cereal box, but I probably need to take the plastic liner out of that cereal box to make it recyclable. I can dispose of certain kinds of cardboard, but a greasy pizza box I can't dispose of, right?
That's correct. And we would invite everybody and implore everybody to go to our website, recyclingsimplified.com. Take a few minutes and educate yourself on how to recycle responsibly. Help us do a good job for all of our customers, because we can have, if you're in a multifamily type residential situation, you can have 9 out of 10 tenants recycle correctly and have one tenant recycle poorly, and it contaminate all the rest of the hard work that everyone has done. So if you go to that website, take a few minutes, you learn how to do it right. It's a pretty simple process to follow, but we've done a good job in this country in making recycling easier. What we haven't done overall is made recycling more intuitive. And, packaging companies, like to throw a recycling logo on about everything they make. And the fact is, all plastics aren't recyclable. There aren't markets for those things. Again, as you said, it's easy to contaminate good paper with broken glass and with food waste.
All right, Don, thank you very much. Don Slager, Republic Services CEO. Have a good holiday season. And that does it for The Exchange. I'll join Contessa Brewer on Power Lunch, which begins right now.
And you can bet I'm looking forward to that. We'll see you in a moment, Tyler. I'm Contessa Brewer. Here's what's new at 2 on Power Lunch. A blockbuster jobs report setting the market on fire. Trade, recession fears evaporate right before our eyes. Is this as good as it gets? Plus, McDonald's is about to enter the chicken wars and take the crown, according to one analyst who, indeed, tried the new chicken sandwich, and he is here to tell us how it tastes. And later, the road to $500. We'll tell you why one top analyst thinks Tesla could be about to rev up big time. Power Lunch starts right now. Take a look now at the market, sitting pretty in green fields as far as the eye can see. The Dow up more than 300 points with today's big gains. All 3 of the major indices less than 1% from all-time highs, erasing losses earlier this week. To Tyler now.
All right, let's get more on today's jobs-induced rally with Seema Modi at the New York Stock Exchange. Hi, Seema.
Hi, Tyler. Was certainly a risk-on tone to today's market as investors shift their focus from that weaker-than-expected manufacturing report earlier this week and focus a bit more on strong U.S. jobs growth as witnessed in today's report and consumer sentiment once again highlighting the resilience in the U.S. economy and the consumer. Plus, optimism building around a trade deal being reached before the December 15th deadline after China said it would waive tariffs on some imports of U.S. soybeans and pork. Check out what's driving the Dow right now. It's Apple, Nike, Goldman, and take a look at shares of 3M up nearly 4%, which is a rebound from yesterday's lows on a report that the industrial giant is looking to sell a $1 billion sale of its drug delivery systems unit. That's a report from Bloomberg, and that stock is at session highs. Now, this rebound, broadly speaking, has really extended into small caps, which tend to move on upbeat economic data. The small cap index at a 52-week high, but still about 6% away from a record high. The stock at the top of the S&P 500 right now is Ulta. Ulta higher on earnings and a positive Q4 guidance thanks to stronger demand for skincare products. And JP Morgan saying the company is getting much better at containing costs. Stock up 12%. Back to you, Contessa.
All right, Seema, thank you for that. And 266,000 jobs added, the lowest unemployment rate in 50 years. Steve Wiesman joins us now with more on what President
Trump... Say it again,
Trump,
Contessa. How many jobs?
50 years, 266,000
Well, it's a big
jobs.
number, outsized jobs number, suggesting, by the way, the economic slowdown that we mostly forecast in the fourth quarter could be exaggerated. We have a new rapid update. It's not affected by this number, but over the week, it's gone up. We're at 1.9% now, and that's up 0.4 percentage point this week. Barclays saying this is another reassuring sign that the ongoing malaise in the goods-producing sector from the U.S.-China trade tensions and sluggish global growth is having little noticeable impact on the broader U.S. economy. Here are the jobs growing about. How many non-farm payrolls, Contessa?
266,000.
And look at the estimate, 187,000. Wow. That's a big beat right there. Revisions up 41,000. Average hourly wages up just 0.2, and we're going to talk about that in a second. Unemployment rate, meanwhile, very tight. Labor market down 3.5%. J.P. Morgan says just in time for Christmas, quote, the solid gain in labor income should be a support for continued solid consumer spending. Now, while job growth is strong, a new index launching today suggests that job quality has been and remains low. The Job Quality Index is a venture between public, academic, and nonprofit institutions led by Cornell Law School. Debuts at 80.4. A reading of 100 means an even distribution of high-paying and low-paying jobs. So at 80, the index is at a 5-year low. You can see there, it's been generally trending down since 2017, popped up in 2017, and also, by the way, just before the 2008 recession. The index doesn't change anything about how robust job growth now seems to be, but it might help explain why we have low wage growth and a very tight labor market. And I'm on the edge of my seat because we have a guy here who can explain this to us. And it's an economic mystery that's been out there for a very long time.
We're going to bring him in right now, Steve. So stay here.
Love it.
Stay right here.
Love it.
Let's bring in the co-architect and author of that Job Quality Index that Steve just referred to, Dan Alpert of Westwood Capital. Dan, welcome. Good to have you with us.
Good to be here.
Explain it to us. And does it embrace not just wages when you compare low quality versus high quality, but hours worked? Because I suspect that a lot of the jobs that are described as low quality are low hours in addition to low wage.
No, I think you hit the nail right on the head. The bottom line is that this index is tracking weekly income, right? And that is a function of wages and hours worked. And the main change that we've seen, particularly since the Great Recession, is a decline in hours worked among low-wage workers. So that actually has impacted people even more. So when we talk about quality, we're referring just to that figure, to the issue of how much people take home from jobs. And unfortunately, the majority of jobs that have been created over the last 10 or 15 years have been in this low-wage category.
So are employers gaming the system in some way to keep workers below a level at which they would otherwise have to pay benefits or be subject to certain regulations that might not obtain if they kept the hours worked at 20 a week?
There's not a lot of evidence of this being benefit driven. What there is a significant change in the way employers employ people, and certainly in some of these classifications you have just-in-time labor, people who are saying, look, we're not going to tell you how many hours you're going to be able to work, but we'll tell you when to come to work. And so people are working these very, very strange work schedules, so strange that they're unable to hold two jobs because they don't know when they're going to be working in the first job. So it's really not a question of...
My son is in exactly that predicament.
Is that right?
In other words, he's working a short-hour job, but they'll tell him on Sunday what his schedule is for the next 4 or 5 days, so he can't really go out and commit to a second job.
Correct. And that is really one of the things. And obviously just-in-time labor is a big part of it, but it's also the fact that there is an underemployment of the American people, right? You have more people than there are jobs, notwithstanding the low unemployment rate, which looks like we're in a very tight market. We're not seeing the rotation from the type of low-wage, low-hour jobs that we would have at the beginning of a recovery into higher-wage, higher-hour positions. And that rotation, that pivot, hasn't happened.
All right, so we want to broaden out the conversation just a bit here with David Rosenberg. He's been warning about an impending recession. He's been a skeptic of this record rally. David is the chief economist and strategist with Gluskin Sheff. It's good to see you today. So what about this index and the results speaks to what you've been trying to say about the broader economy, David?
Right, well, you know, so the cheerleading was 266, 266. But nobody talked about 83 because the household survey showed 83,000 jobs, not 266, and only 17,000 of those 83,000 jobs created in the household survey last month was in full-time employment. But I think more to the point is that when you're taking a look at the industry composition, it's rather remarkable. It also helps explain why average hourly earnings are so weak, because it is an average number. But we are seeing month in, month out this compositional shift towards low value-added service sectors. I mean, leisure hospitality now, 1 in every 8 jobs in the United States is in that particular sector. These people make 40% less than everybody else in the economy does. And their growth in this part of the economy, whether it's in hotels or it's in fast food restaurants, the employment growth there in the past year is 2.6%. It's double what it is in the rest of the country. So, you tack on that, local government, big employment gains there, and waste management, big employment gains there.
Out? David,
it's very concentrated in low value-added areas.
I just want to make a political point here, which is in each of the current administration and the past administration, when there were strong job growth under Obama, the Republicans said, yeah, but it's low quality. And then you have some of the Democrats saying, yeah, the strong job growth under Trump, but but it's low quality. It turns out both sides are right. I mean, it's just they're right at different times because they're saying it for different reasons. But it turns this index shows low quality job growth under both administrations. And no real change. You had a ramp up at the end of the Obama administration and then a come down during the Trump administration. Right. Dan, I just have a quick question for you, which picks up on what Dave was saying. And in particular industries where this job growth is happening that's responsible for it. Is it retail? Is it leisure hospitality? Is it not manufacturing?
There's 4 industries that you should look at because if you look at the gains in them, they completely offset the losses in goods-producing jobs. And that is healthcare and social assistance, retail trade, administrative and waste services, and then, of course, leisure and hospitality, which David just mentioned.
So those 4 sectors, when you have a lot of job growth in those kinds of sectors, that keeps the index down, essentially.
It keeps the index down, but it's also the point of absorption because we've effectively hit peak service. One of the things that happened that people aren't aware of, at the time of the Great Recession, we'd had gains in the service economy all along, right, from the 1960s, through today. But at the point of the Great Recession, the size of the service economy relative to the whole stopped growing. It's still 83%.
I want to leave a little bit of time, guys, because I really want to know what to do with this idea here. Go ahead,
would you indulge me a question for Dave, if I might, and that is this. The facts that you cited in your first answer, Dave, and the numbers that we've been talking about here, do they point to inevitably recession, or do they point more to an economy that is in a massive mega transition away from certain kinds of jobs and toward others, but does not necessarily mean that the economy is going to recess?
Well, what I said earlier really had nothing to do with the cycle itself. And as you said, this is an ongoing transition that we're seeing month in, month out of the data. Now, when I take a look at the non-farm payroll report, I almost pretend that I'm an equity analyst looking at the equity market. So I'm taking a look, for example, at the cyclically sensitive sectors of the non-farm payroll number. So I'm looking at transportation services. I am looking at retail. I'm looking at construction. I'm looking at durable goods manufacturing, so on and so forth. So I'm not looking at the sectors that never go down, because there are some areas that never go down. Health and education don't go down in a recession. I'm always looking at, in terms of driving forward with the forecast, what are the areas of employment that give us trouble signs at inflection points? And I could tell you that the cyclically sensitive segments of the employment report actually were stagnant. They didn't decline, but they were actually flat on the month. And that's an early sign for me. So, I mean, you can blankly look at the headline number and draw your conclusions, but there's a wealth of information when you look at the sectors. The one thing I'll say is this much. If you actually believe in the non-farm payroll report today, which had a lot of tailwinds, I mean, a 5-week interval, not a 4-week, late Thanksgiving, there was the returning of the GM strikers, a lot of tailwinds behind today's number. But if you're buying the number lock, stock, and barrel, then you have to believe that productivity is contracting again. Because I noticed earlier that Steve mentioned that, that the GDP estimate for the fourth quarter went up.
Yeah.
Why would that happen? Employment doesn't go into GDP. Spending and output go into GDP. And when you're taking a look at spending and output in real terms in the economy, fourth quarter, it's barely 1% growth. When you're looking at employment, the labor input to the economy, well, it's 2%. So we already had actually, surprisingly, a negative productivity print in the third quarter fractionally. But if you believe today's number, productivity is going down again. So I would readily say that it's not a GDP recession, but we do have a recession, by the way, in profits. That much we do know. And the market's going up because of the expanding multiple. But there is a recession, actually, in productivity, as we sit here right now. And I think that's a structural problem.
This is a conversation that we could have for much, much longer. Appreciate the insight. Dave Rosenberg, Dan Albert, and, of course, Steve Leisman as well. Thank you, guys.
All righty. For the bond market reaction to that jobs report, and some reaction maybe to what we just discussed, Rick Santelli is ready at the CME. Hi, Rick.
You know, David Rosenberg has been one of my favorites for many, many years. A smart man. You know, it's hard to get a handle on the fundamentals. He's been mostly bearish, and he's been right on the direction of fundamentals. But there's a lot more secret sauce into what prices markets. Look at an intraday of 10s. It was a rocket ship, just like the whole curve was, in terms of yields going up, price going down. But something happened. All of a sudden, we went back to unchanged, but now we're back up again. Curve steepening. We're up basically 2 on the day, none on the week on a 2-year. We're up 3 on the day and half a dozen on the week of 10s. The long end just has more buoyancy, but it's still a little heavy considering how it shot up. The short end's pegged by the Fed pause. Now, if you look at a November 10, you can see we're highest levels on a closing basis since the 13th of November. 2-day of 10s minus 2 shows you the steepening. Finally, the dollar index. Intraday, it looked just like all the rest of the markets, up big. But if you look at the 1 week, it's still down on the week. Tyler, back to you.
All righty, thank you very much. Contessa?
Coming up, fast food chains involved in a high-stakes game of chicken over sandwich offerings. Can a new contender emerge to rule them all? We'll talk to a man who says he's eaten more fast food chicken sandwiches than a human being should be allowed to. His take next. And then from chicken to pizza, the food fight between John Schnatter and Papa John's board takes a new twist. We'll have those details coming up right here on Power Lunch.
The Bond Report is...
This winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
Ah, Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Owning your own business doesn't automatically make you an accounting expert. So it's good to know that when you choose to manage your money with Sage, you don't just get great business management at your fingertips. You get great local support too. Anytime, anywhere. Simple solutions from Sage. Trusted by over 1 million British businesses to manage finances, operations, and people. Find out more at sage.com/automate.
I'm Ben. I used to be homeless. I'd sleep in the train station, stuff newspapers in my clothes to keep warm. Sometimes I thought I wouldn't wake up. No one should have to live like this. The Crisis Christmas Centre was a safe place. We got hot meals, health checks and support. In the new year, they helped me find work and a home. This Christmas, you can reserve a place for someone who's homeless for just £28.87. Go to crisis.org.uk today and help someone like me take their first steps out of homelessness. Thank you.
Come on in, everyone! Gavin, Stacey, Mrs. Brown, Robbie, Your Majesty, Craig, Shirley, Mr. Bond. Oh, hello, Smithy.
Lock the fridge, please, love.
Have them all round to yours with the Sun's brilliant Christmas TV listings pull-out. Pick up the Sun on Sunday this weekend.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search premium to upgrade today.
Welcome back. Following the explosion of Popeye's spicy chicken sandwich, the fight is on to win this game of chicken. McDonald's hatching its own sandwich to compete with the growing competition. But with such a crowded field, who will rule the roost? Can you get any more?
Yes.
I mean, that
had
kind of
to go
chicken,
there.
It's which came first, the chicken or the egg? Telsey is out with a new note, says McDonald's new product is going to be a big hit for the chain. And with us now to discuss it, Telsey Advisory Group's Bob Darrington. Bob, nice to talk to you.
My pleasure.
So you've tasted this new offering. Did McDonald's really need a new offering? Because let's face it, they've had a chicken sandwich on the menu for as long as I've been alive.
Yes, they did. They clearly lost market share within the chicken category during this past quarter. And I think by the company's own admission, they needed to improve that product. I think the McDonald's franchisees have been clamoring for a new product for quite some time. I think they got close this past spring, although the franchisees asked for a few improvements. And I think at this point, it's a much better product than the current product on the menu. And I think it will be a much better product by which they can compete within this category.
I want to get to the revenue and why this is important for McDonald's bottom line. But I got to tell you, reading your note, I was really surprised how much power and influence the franchisees have over ingredients.
I'm not surprised, quite frankly. I used to be a franchisee of another restaurant chain. Believe me, these people put their money on the line investing within their business. They're extremely opinionated. And, to be fair, the McDonald's group are typically very well capitalized. So these are smart business people who have done a really good job growing their business. And I think they clearly want to have a say. And I think that's one thing management has recognized, the strength of their franchise and their opinion, what they bring to the company.
If you're right, and if McDonald's can beat out Chick-fil-A on a chicken sandwich, what does it really mean to me? I mean, is this important in any way, shape, or form to the overall revenues for McDonald's?
Yes, it absolutely is. Now, listen, to be fair, they're not going to beat out Chick-fil-A. They're not going to beat out Popeyes, but they're taking a product on their menu, improving it dramatically, and making it a much better tool by which they can grow their sales and traffic trends. In that regard, I think this product is going to be a very good success compared to what their previous product has done. Remember, the buttermilk chicken, crispy chicken, has done well for the company in recent years. However, the competition continues to raise the game, and I think McDonald's knows they too need to improve their product, which they've done.
Can you put numbers on the percent of revenue or food product that is derived from chicken at McDonald's, and how you think that might change as a result of this better product? In other words, you think of McDonald's as principally a hamburger purveyor.
Yeah, we're modeling same-store sales for the company in the coming fiscal year up 3.7%. Of that 3.7%, a lot of that is going to come through menu mix and price. And I think ultimately greater level of chicken sales at a higher price versus less sales as last year. I wouldn't be a bit surprised if potentially it added 200 to 300 basis points anyway to comps, depending on how successful they are.
Bob, everybody wants to know, what did you like about McDonald's new chicken sandwich?
Listen, to be fair, it's hard to find fault with a really good fried chicken sandwich. I think Popeyes is a very good product. I think Chick-fil-A is a very good product. And I think McDonald's has rightfully targeted Chick-fil-A's product in trying to replicate that recipe for their consumers. So in that regard, I like the taste. I like the lower level of breading versus Popeyes. The bun is a terrific upgrade versus either of the product of those two.
But can you tweet it?
Can you what?
Can you tweet it? I mean, one of the reasons why this got to be such a hot thing is because you had Chick-fil-A and Popeyes fans going at each other. Who's going to do that for McDonald's?
Let me tell you, that's why the real key here is that McDonald's is giving the tool to the franchisees. Now, ultimately, they need to execute at the store level and communicate that to the consumer and convince them to come in versus going to those other brands. That's going to be no small challenge.
Can they cook these sandwiches in the same equipment that they currently have?
To be fair, they wouldn't let me anywhere near their kitchen, so I don't have an answer to that. I know that Chick-fil-A uses 100% refined peanut oil in producing their sandwiches. I don't know whether McDonald's does or not.
All right, Bob. The pictures are beautiful. You could have been a food photographer there too. Thank you so much. Appreciate that.
My pleasure, guys.
Tesla shares, good to see you, Bob. Tesla shares rising nearly 50% in the past 3 months to $338 a share right now. And one top analyst says 500 could be the next stop for the stock. Our traders will weigh in. And we are seeing a broad rally for the major averages today after that stronger than expected jobs report. We just picked some nits within it, but Power Lunch will be right back. The market is higher.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Why do some leaders inspire action when others don't?
The best leaders are actually the best followers because they don't see themselves as the thing to be followed. They actually see themselves as following a cause bigger than themselves.
I'm Guy Raz. How leaders inspire movements for change. That's next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Along the goal line, Martin scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
The action live on TuneIn Premium.
Move, hit a shot, they stop!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Tesla popping today after Morgan Stanley bumped its bull case price target up to $500 a share on Cybertruck sales and growth in China. But after a sizzling 3 months, is there any more gas in Tesla's tank or maybe charge in its battery? Let's bring in your Trading Nation team. JC O'Hara of MKM Partners and Gina Sanchez of Chantico Global. JC, as we mentioned, had a very good run. This is a stock that is kind of goes on streaks and then kind of obeys a bigger trading range. So how do you see it from here?
That's right. This stock is extremely susceptible to these large momentum swings. Just look back at last June. The stock was cut in half. It was on, multi-year support at 185. Since then, the stock doubled. But now it's overbought and at resistance in that, 365, 380 area, right? That's where the stock topped out in 2017 and 2018. So can it go to 500? Well, maybe, but I think, an overbought stock at resistance from this position, it would be very difficult to get there. I would rather exercise some patience, wait for a pullback, and I think that'll be a better tactical buying opportunity.
And Gina, I guess just bigger picture on the Tesla story. Just when you thought it was just going to be about blocking and tackling and getting production rates up and Model 3, Elon Musk comes out and creates this whole new hype cycle around the Cybertruck, for better or worse, but it's gotten the stock moving, at least helped to. How do you see it here?
Well, I think that Tesla is definitely a faith stock, and many investors in Tesla are really, really sort of looking at the real long-term vision of this and willing to seemingly suffer a lot of pullbacks that happen in the interim, and it causes the stock to develop an incredible momentum when it starts to run. Remember that 3 months ago that we were worried about production. 6 months ago we were worried about production. This company still has issues, and when it overshoots like this, it naturally will come back. And as you said, it will eventually obey a trading range because no matter how bullish the story, it still has to block and tackle and meet all of the interim requirements in order to maintain that bull story.
All right, still a $60 billion market value. It's fun to remind ourselves of that. Kind of amazing. JC and Gina, thank you very much. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Tyler, back over to you.
All right, thank you very much. Michael, ahead on Power Lunch, the mentalist Oz Perlman will join us live. Always love it when he's here to explain why he will win the 2019 CNBC stock draft. Does he have the magic in him to win the title? He was leading. We'll see if he can regain the lead. Plus, Papa, don't preach. Papa John's founder John Schnatter continuing his attacks on the company's new management, but he's still dealing with the fallout from his own scandal. And we just got a blowout jobs report for November. But what about swing states? Are voters happy with the economy under President Trump? Our panel will debate all of this when Power Lunch returns.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
A common mistake that some investors make is searching for stocks with the highest dividend yield. But this can be a dangerous strategy because a high dividend yield could mean that the stock price has come down sharply or that the dividend itself is at risk of being cut. So before you reach for yield, be sure that the stock is also fundamentally sound. I'm Joanna Payne, and Schwab is the better place for traders.
You know that tech stock we talked about?
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
This winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Coffee shop, cashback, cat flaps, cashback, beanbags, rucksack, hire car, buy a car, flapjack, cashback, dumbbells, cashback, takeaway, holiday to anywhere the sun is at, bum bag, laptop, big match, hatchback, binge watching, paintballing, crab fishing, cashback, anything you want to buy, everywhere you want to go. Guess what? Cashback. Whatever you spend your money on, get money back every time with the American Express Platinum Cashback Everyday Credit Card. Search Amex Cashback. Representative 22.9% APR variable. Minimum annual spend to receive cashback. Terms apply. 18 plus subject to approval.
It's time to rake in the dough with eBay. Multiply your moolah and feed that cute little piggy bank you've had sitting on your shelf. List by Monday and you can make more money than ever selling on eBay with a max £1 selling fee per item. It's super simple. So while you're spending the weekend doing fun stuff, your little piggy bank is getting bigger. Making money. It's happening on eBay. Activate your offer at ebay.co.uk/promo. Excludes business sellers. T's and C's apply.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. House Democrats repeating their commitment to combating global warming despite President Trump's decision to withdraw from the Paris Climate Accord. House Speaker Nancy Pelosi says she's looking forward to the 2020 G7 meeting, which will focus on the climate crisis.
The White House said, well, when we have the G7 here, we're not going to be talking about climate. Well, hopefully we can change the political climate of all of that between now and then, and that they will. It's an issue they cannot avoid.
The UPS truck at the center of a deadly chase and shootout in Miami on Thursday has been removed from the scene. This morning, 2 men had carjacked the truck with the driver inside while fleeing an armed robbery. 4 people, including the UPS driver, an innocent bystander, and 2 suspects were killed in the shootout. And a London company is hoping to help the planet by changing the shape of its wine bottle. Garçon Wines has flattened their bottle in a move that they say is more environmentally friendly, and it lowers its shipping costs, too. The bottle uses 100% recycled plastic. That's a novel approach. That's the news update this hour. Contessa, back to you.
All right, Sue, thank you for that. Let's take a look at the markets right now. All in the green. The Dow is up big time, 338 points, or 1%, and more than 1% now. S&P 500 is up 1%, and the NASDAQ Composite, as well as the Russell 2000. Joe Biden releasing details of his tax plan this week, hoping to raise trillions of dollars in tax revenue, mostly targeting corporations and the wealthy. John Harwood spoke to the former vice president about that in the latest Speakeasy, and John joins us now. John, tell us what you learned.
Well, Contessa, one thing that's not in former Vice President Joe Biden's tax plan is a wealth tax, which is supported by his challengers from the left, Bernie Sanders and Elizabeth Warren. He told me that he doesn't want a tax to single out one small group of people, but he does want to tax a particular kind of activity, and that is financial transactions.
Is there certain things that you have to rate the market a little bit here? And the market is that if you have all of the tax breaks, essentially all the tax breaks, all of the benefits flowing to the top 0.1% of 1%, there's never been as great a concentration of wealth, including going back to the Great Depression.
Right.
Ever. And so one of the things that worries me most about that, John, is not just the political, the economic impact on people who are hard. The middle class is getting killed.
Treasury Secretary Mnuchin today said that he opposed a financial transaction tax, which some in the race have supported, because it would destroy financial markets. Is that why you've rejected that idea?
No, I still think we should do that. That doesn't raise the kind of money. I think we should have a financial transaction tax.
Now, Joe Biden told me that he fears the president who succeeds Donald Trump will inherit a slowing economy, notwithstanding the strong jobs numbers today, or even an economic recession. Of course, he wants that to be him, and that's why he spent the last 8 days on a bus tour here in rural Iowa, guys.
All right, John, thank you very much. John Harwood in Chester, Iowa. So Joe Biden campaigning on the platform that Trump's policies haven't grown the economy, but we did get a gangbusters jobs report this morning. And when you drill down and look at 4 of the key swing states for 2020, the unemployment rate is coming down at least a full percentage point in Pennsylvania, Michigan, Ohio, and a half point is in Wisconsin since November of 2016. So is that job growth enough to deliver Trump a win in these crucial states? Let's bring in our Friday jobs panel. Mark Morial is the president and CEO of the National Urban League, and he will be rooting for LSU tomorrow when they play against Georgia. And he's the former mayor of New Orleans. Joe Watkins, a former White House aide to George H.W. Bush. Gentlemen, welcome back. Good to have you with us.
Good afternoon.
You know, the numbers this morning, Mayor Morial, were pretty encouraging. We had a segment on earlier today where there were some critics there. If you drill down at certain points in that jobs report, you can pick it apart and say maybe it's not as good looking as it was. But overall, you would have to say that unemployment at a 50-year low is a pretty good thing, Mayor.
The big theme is that this is a continuation of the expansion and the job growth, which began a decade ago. And it continues, and we've seen it accelerate, we've seen it decelerate.
this is a month of acceleration. But underscore the fact that the jobs being created by and large don't pay the same type of wages as the pre-recession jobs. And that leads to the biggest challenges that Americans face, and that is a better picture when it comes to jobs, but a feeling that that paycheck doesn't get them what they need to be able to live the quality of life they want.
We, Joe, debated earlier today whether the jobs, we looked at an index of high quality versus low quality jobs, and the consensus there was that it's a combination of growth in lower wage jobs and jobs that don't have full-time hours attached to them. But be that as it may, let's look in the swing states, if we might, for a minute, and I'd like to get your reaction to this. The unemployment rate is lower in the states that carried President Trump into the White House: Pennsylvania, Michigan, Wisconsin, and Ohio. But in each of those states, Pennsylvania, Michigan, Wisconsin, and Ohio, Mr. Trump trails Joe Biden in the Real Clear Politics average polls by something like 7 percentage points. He also trails Ms. Warren, Senators Warren and Sanders in those states. Is a good economy not redounding to the president's electoral benefit?
I think the good economy will eventually redound to the president's benefit. I think that the president will benefit from these consistently strong numbers, consistently strong low rate of unemployment, and even if the wages are only ticking up on the lower side of the ledger, remember the president does extraordinarily well with non-college educated groups. And these will be the folks that are experiencing some uptick in their employment, in their income. This is a good thing ultimately for Donald Trump, I think.
You know, it's interesting. Tyler points out here that these states have lowered their unemployment rate, and yet the unemployment rate remains higher than the national average. In Pennsylvania, it's 4.2%. In Michigan, it's 4.1%. In Ohio, which often decides presidential elections, it's 4.2%. Joe, when you're looking at these voters who so significantly supported Trump in 2016, we're talking about the farmers and the coal miners out there. Do economic issues drive their vote, or are these other issues that they're going to the polls about?
Economic issues do drive their vote, but they also care about tone, and Donald Trump has been very, very convincing to folks in Ohio and Pennsylvania and Wisconsin and Michigan by saying, "I'm fighting for you. I'm the guy that's fighting for you, and you need to continue to hang in there with me. I'm the one that's fighting these trade wars. There may be some short-term pain, but there'll be long-term gain if you stick with me." And I think that message will resonate with voters in 2020. So I'm not too worried that he's lagging behind right now in these early polls.
You know, Mayor Morial, in 2016, President Trump targeted the voters that Joe just so accurately described: the disaffected people who felt alienated from the economy. They felt like the left behind, the forgotten man and woman in decaying, in some cases, cities in the heartland and so forth. But it would seem to me that these are the absolute target voters for Democrat candidates this time around. Mr. Sanders, Senator Warren, Mr. Biden, Buttigieg, they are all targeting that disaffected person. They're not going to cede that turf to President Trump this time. They can't.
And of the aforementioned, 3 of them lead Donald Trump. But here's the problem. In Ohio, Donald Trump's approval rating is down 19%, 17% in Pennsylvania, 20% in Wisconsin, 22% in Michigan. These are stunning numbers. He's underwater from where he was in the 2016 election. And what that tells me is that the economy is not the driver. It's his rhetoric, it's his leadership style, it's his effort to cancel the health care plan. It's a wide range of issues, and voters are not simply looking at the economy and saying we're going to give the president credit, because it's a continuation of what began under Obama. These underwater numbers for the president in these states are a tremendous challenge. These are double digits, near 20%, so you're down from where you were in 2016, and in 2016 you were only a point ahead. So the economy, this may be an election where the economic issues are not going to be the sole driver for many Americans, including Americans in many of those swing states.
All right, gentlemen, we have to leave it there. And have a great weekend, guys.
Thank you. Go LSU.
Thanks,
Go LSU. You bet. Joe, good to see you also.
Thanks so much, Tyler.
Thank
the
you.
man who is the John in Papa John's continuing his fight against the company he founded. We'll have the latest on a rather sticky situation. And a big day for the Dow, up more than 300 points. Boeing, 3M, Goldman Sachs, the biggest contributors to that gain. We have much more on the markets coming up. Stay with us.
Christmas isn't just about the turkey, you know. At Asda, we've a whole range of delicious joints to bring the family together, like our Butcher's Selection pork loin at just £3.97 per kilo, and our Butcher's Selection beef joint at £4.97 per kilo. So, who's on carving duty? Asda, let's make Christmas extra special. Selected stores subject to availability.
Forget the cheese, basket, and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today. NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
'Tis the season for lights, presents, gingerbread houses, and, most importantly, news. TuneIn has commercial-free news from MSNBC, Fox, CNN, and CNBC with TuneIn Premium.
It's an update to a story we brought you yesterday. It's the toe-to-toe battle.
Starbucks, which almost never gives out anything.
Which is also listed in Syria at about 1 billion.
Let TuneIn spread the holiday cheer all month long. Upgrade to TuneIn Premium today. Ho, ho, ho.
It's College Football Conference Championship Weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
When we last saw John Schnatter, the founder of Papa John's, he said he'd eaten 40 pizzas in 30 days, and he promised a day of reckoning for the company. Well, now he's filing a new lawsuit over his ouster from the company. Kate Rogers has more on what has become rather a soap opera.
And what a soap opera it is, Contessa. This all goes back to a conference call from May of 2018 where Schnatter said a racial slur. He alleges a recording of the call was leaked to Forbes and ultimately led to his ouster from the company that he founded because he says his words were mischaracterized. His team believes that this recording, which is cited in the suit, will give additional context to what he said and vindicate him. In comments just into CNBC, Schnatter's attorney, Terrence Healy, confirmed that they do have a copy of the recording and said, quote, Mr. Schnatter just wants a truthful accounting of what happened and how something he said in a private business meeting ended up in Forbes magazine misrepresented. Just yesterday, Schnatter's wife of 32 years, Annette, also filed for divorce from the pizza mogul. Schnatter changed his PR team up in recent months and just last week gave an interview that you mentioned in which he said he ate 40 pizzas in 30 days, criticizing the company's recipe since his departure last year. The new Papa John's CEO Rob Lynch told CNBC just this week that the recipe and the ingredients are the same, but Schnatter suing Laundry Service, which is the ad agency that this conference call took place with, saying that they secretly recorded him, and he alleges that they leaked this recording.
Why is he suing him now?
You know, the timing is interesting. He's been very quiet over the past year. He had 2 previous lawsuits against Papa John's and its board, which were settled. He got some documents that he wanted. I'm not quite sure why now. We haven't been able to get an answer to that.
What's he suing for?
So he's suing for unspecified damages, whatever the settlement is. He says he will donate it to a charity. He also wants a trial in front of a jury. But 3 counts, including breach of contract, interference with prospective, economic advantage, and intentional infliction of emotional distress.
But it doesn't say on there, I want my job back.
No, but when I did ask him last year at one of his court cases, I said, are you trying to come back as CEO? He said, that's not what I'm trying to do. He used to be the largest shareholder. He no longer is. He clearly still wants to be involved in some capacity, though, right? Yeah. Kate, thanks.
40 pizzas in 30 days? Or was it 30 pizzas in 40 days?
Oh, 40 and 30, Tyler. Can you do it?
No. But I love pizza.
Me
All
too.
right, Kate, thanks. Coming up, a check on the 2019 stock draft thanks to Bitcoin. Oz Perlman had been running away with it. But now, Nick the Kick Lowry has recently passed him. Does Oz have a trick up his sleeve to take back the number 1 spot? We will find out next on Power Line.
Do you have concerns about mild memory loss related to...
Leave a mince pie out for Santa this Christmas and you might find the whole pack disappears. At Asda, our extra special luxury mince pies are just £1.39. And our extra special slow gin mince pies are only £2. Well, Santa might like to try something different. Asda, let's make Christmas extra special. Selected stores subject to availability. 6 pies per pack.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today. It's College Football Conference Championship Weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the College Football Playoff. Catch all the action on TuneIn. Search college football to find your game.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, TuneIn listeners, Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
On the goal line, scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
Hit a shot.
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Is that right?
Yeah, that's a good one.
Wow, 88th in the marathon.
The New York City Marathon.
Well, I'll tell you who I'm talking to in just a minute. Less than 2 months, we will crown the 2019 stock draft champion. The race has tightened over the past few weeks. The former NFL kicker and reigning champ, Nick Lowry, has taken the lead from Wall Street mentalist Oz Perlman. Oz had been leading the whole way up until last month, thanks to Bitcoin. So will Team Oz Knows be able to reclaim the lead in the home stretch? Oz is here with us now. 88th in the marathon. That's pretty good. 2:32. That's amazing.
Yeah, it was New York City.
But that's not what we're here to talk about.
We're talking about...
Bitcoin had been powering your portfolio until recently.
Yep, and it's coming back.
It will come back?
There is no doubt in my mind. If we know one thing, the stock draft is about asymmetrical bets, right? I'm loving Nick's picks with tech, but here's the thing. Tech's only going to go up so far. Bitcoin, you look back, track the years, the halving is coming up in May. Bitcoin can go gangbusters. I said it before, I said it again. We're hitting 5 digits before this thing ends. I will run away with it in January.
Your other two stocks, I assume you're happy with, Disney and Goldman Sachs. Both are up,
Absolutely.
though nowhere near as much as Bitcoin is.
Agreed. But Disney, they rolled out that streaming service. I think we did very well with that. Right off the bat, subscriptions are looking good. The content's phenomenal. I think that's going to power me along as well. I don't want any duds. I want all winners, and Bitcoin is going to be my Grand Slam home run.
But there's been other stocks that have done more than, say, Goldman Sachs up 11%. You know,
Right.
would you have put in something else if you'd had an option now?
I kind of wanted to pad it, so I wanted to go for it where, again, I think that this is won not by doing the safe picks. The safe picks will get you 4th place. I don't want 4th place. I want number 1. I want that trophy. And quite frankly, you got to go big or you got to go home when it comes to the stock draft.
Bitcoin was a gamble, and we'll see if it works out. It has so far, until recently, very well for you. All right, now, it wouldn't be a segment with you unless you didn't dazzle us with
Dazzle, but you know what?
So
It's not
let's
really.
do it.
Let me tell you why I'm going to win the stock draft. It's an edge that I've got. It's an edge.
Oh, I
because
believe that.
What do you think? Every single viewer at home right now wants the same thing. You want to buy low, you want to sell high. That's the name of the game, right? How do you evaluate an asset? I'm talking money. I'm not playing around. How about this? Let's invent something. This is not a real thing because you know stocks inside now. I'm making up a company, XYZ Corporation. I don't know what they do. Actually, that's like a very Econ 101 name. You've got a better name. What's on the tip of your tongue? What are we naming this company?
Electric Asset.
Electric Asset. I like it.
All right.
We've done our homework. We've looked at the balance sheet. We looked at PE ratios. We've seen, are they profitable? Day one, IPO. Tyler, it's as if you have a crystal ball. You go on CNBC, you say, I think I know what that first share is trading at. Hit me. How much cash is that trading for?
You want me to tell you my number?
Tell us.
$162.
$162.
$162.
Now here's
That's the opening price.
That's the opening price. Nobody could have known it. It's not even insider. It doesn't exist. It's only in your mind. And that's my edge. Money. $162. Honestly?
No.
Tyler, 20, 40, 60, 80, 100.
All right.
120, 140, 145, 150, 155, 160, 161, $162. Look me in the eye, look them in the eye. You could have said any number. You could have thought of any number. Is that right?
Said any number.
Hold up. But that's looking at numbers. There's a creativity involved in picking stocks that you can't
And we
predict.
did not coordinate this. I did not tell him
Electric
this.
Asset. How many other names could you pop in your mind?
A lot.
A million. But that's the thing. That's why I'm going to win this, because I know what you're thinking before you even do. Take a look, Contessa. Just for you. ELECTRIC. That right there is electric. And you heard it. Asset. Come on in, tights.
That is truly amazing.
If you can get higher and lower, you will see these bills. Bam.
It spells
Electric.
out electric asset.
Oh my gosh.
That is really something.
And Tyler is checking his wallet because he thinks I took all this money from him. He's like, I'm broke. Where's my wallet? Where's my watch? It's still there.
And right now, because I'm so stupid, I'm just going to take away the ET.
Yeah. No.
That's how I feel right now, ladies and gentlemen. Right there.
Don't send this to the FCC. Yes. Thank you very much. I look forward to seeing you in the stock draft.
I'll take the money and I'll give you a
Get out of here.
Electric asset.
Give me a piece. I'll do an early round.
Good luck, man.
Thank you so much.
Final
Thank
stretch
you,
of the
Contessa.
draft. The draft ends on the market close on Friday, January 31st. We will have the winner right here on Power Lunch on Monday, February 3rd. I'm going to pick up an A.
An A.
Here. And a $5
I'm taking a C. I'm taking a C. I got C notes all the time. That's what I'm looking to make.
All right, a big day for the markets. Right now, the S&P 500 is up. Much more on this rally coming up on Power Lunch and what follows after.
At Asda this Christmas, you can save 25% when you buy 6 or more bottles of wine, sparkling wine and champagne. Well, you never know who might pop round. Asda, let's make Christmas extra special. 75 centilitre and 1.5 litre bottles, £4 and above. Excludes gift sets, fortified and meal deal wines. Excludes Scotland and selected petrol stations. Ends 9th of December. Drink aware.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today.
Running down the sideline.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game. Don't want to miss a second of your NFL team's next matchup? Let TuneIn remind you. Just make sure notifications are enabled on your phone and search for your team profile on the TuneIn app. Then, find the game you want under events and tap Notify Me. We'll send you an alert as soon as live coverage begins. NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
While most of the sectors are going gangbusters today, taking a look at the S&P 500, it looks like utilities is the laggard on the list here. It might be because of just how much enthusiasm we've seen over the job growth and what this means for the strength of the consumer moving forward
The utilities were higher earlier in the week when there was a risk-off play going on along with real estate stocks. And today it is back risk-on in a big way as the jobs number comes in. The S&P 500 close once again to record territory on the session. As people sort of put aside their trade worries and put aside their economic worries such as they had them and go back into what are known as risk assets. Nice gain, 1.25% or thereabouts for the Dow Industrial.
Nice way for us to go into the weekend. Thank you so much for watching Power Lunch.
And Closing Bell, we're going to turn it over to Closing Bell. We hope they're ready because we're going to give it to them a little bit early. Closing Bell starts right now. Have a great weekend, everybody.
We are ready. Welcome to the Closing Bell. I'm Courtney Reagan in today for Sarah Eisen. As mentioned, we got a rally on Wall Street here. Major averages higher by about 1%. We're going to see if we can hit those all-time record highs, brushing off some of those warning signs that we saw just days ago. We've got about 59 minutes left to trade to see if we can hit those highs.
Good afternoon, I'm Wilfred Frost. Let's have a look at what's driving the action. This rally sparked by better than expected jobs report, the U.S. economy adding 266,000 jobs in the month of November. White House economic advisor Larry Kudlow telling CNBC that intense trade talks are ongoing on an almost daily basis. And on the trade front, China confirmed that it will waive import tariffs for some soybean and pork shipments from the U.S. in an act of goodwill. That puts us up 334 points on the Dow. We are positive for the week as a whole now on the S&P 500, despite those declines earlier on this week. Joining us for the full first hour of the show, Dan Nathan from Risk Reversal Advisors. Dan, good afternoon to you. Good to see you. Good to see you, Will. So that point exactly, that we're up 0.2% for the week as a whole on the S&P. Do you think that the jobs number justifies that given where we were Monday, Tuesday?
Listen, I think it's helpful when you think about that weak ISM data that we had, manufacturing and services this week. That was a cause of concern, especially if you did not have a lot of confidence that we were going to have the fear of increased tariffs taken off on December 15th. So, this kind of mitigates that. And here we are in very familiar territory, back at all-time highs. But I think it's important to remember that there's a lot of kind of cross currents here. What has happened to get us here? The Fed has expanded their balance sheet by $300 billion, right? And they've also lowered interest rates 3 times, 75 basis points in the last 4 months. That's just to get us and keep us here.
We had that nice jobs report this morning, which gave us the early lift to start things off. We're going to focus Then on the big stories that we are watching today, Steve Leisman breaks down that jobs report and what it could mean for the Fed, tying this all together at the top. Kayla Tausche has the latest on the trade front. Mike Santoli is watching the broad market surge in stocks, and Bertha Coombs looks at the big winners at the NASDAQ today. We're going to start with Steve. Hi, Steve.
Courtney, thanks. Normally a big jobs blowout. Concern about Federal Reserve interest rate hikes? Not today. This non-farm payroll comes in at 266,000, blowing out the consensus of 187,000. October revisions adding another 41,000 jobs. But wages were kind of on the muted side, up just 0.2%, while the unemployment rate fell to 3.5%, a 50-year low. Modest wage growth amid a tight labor market suggests little inflationary pressure, so the Fed will stand pat. Barclays saying we retain our call that the FOMC will remain on hold through 2020. And even the president's top economic advisor suggests the Fed may have done enough.
We had the Federal Reserve way too tight in 2018. But I think now that's going away. They took their foot off the brake.
Somewhere along the line, folks, the market has learned to stop worrying and learn to love a bombshell jobs report.
Steve, I don't want to get ahead of what's been the discussion for all of this year, but as you just showed with Larry Kudlow there sort of suggesting maybe we don't need another cut, how many more quarters months, like we just got before you'd start thinking that the next move could be a hike as opposed to a cut?
You know, the market will probably think that and eventually build. Build that in as a more likely scenario. But, you know, a Powell has laid out a kind of framework here, which is pretty interesting, and that's going to be sustained inflation on the Fed's preferred inflationary indicator that most economists think could be in the 2.5 to 3% range to go on for a while there. So I think we're a long way from that. We're down in the 1.7 range. So I don't know, not quite double, but you need to add a percentage point or more to the underlying inflation rate, Wolf, I think, for quite a while, several months or 6 months before the Fed's going to think its policy is too loose here.
Steve, thanks very much for that. And that's, of course, why the market likes this so much. Good news is good news once again. The S&P's up a 4%, the Dow's up 1.2%. Now, could the strong jobs report impact President Trump's decision to hit China with new tariffs on December 15? Kayla Tausche has the latest for us. Kayla.
Well, Wolf, the strength of the U.S. economy is certainly one piece of a complicated puzzle that President Trump will have to weigh over the next week. Whether the U.S. can withstand a market sell-off, the consumer impact right before Christmas, and more pain sustained by farm and manufacturing sectors, all with the purpose of adding pressure on China to extract
At Amazon this Christmas, there's still time to find great gifts for those final names on your list. Like the Echo Dot, Sennheiser Momentum headphones, and the Philips Sonicare Diamond Clean toothbrush, all with low prices. So there'll be more, and more.
You shouldn't have.
Amazon, delivering all you need for less.
Everybody needs somebody.
Seen anything like that before. We're a president who's been mocked and laughed at.
Continuing a tradition dating back to Bess Truman, First Lady Melania Trump paying a holiday visit to the Children's National Hospital in Washington. She listened as the children read inspirational messages from an advent calendar, and a little bit later, she helped them make snowflakes. It is that time of year. That's the news update this hour. Courtney, I'll send it back downtown to you.
Thank you, Sue. We're going to send it over to Mike Santoli. He has a second installment of the Market Dashboard today. Hi, Mike.
Hi, Courtney. Well, as you very well know, Amazon's logo is a code for going from A to Z or having everything from A to Z. Well, that stock is slipping down the alphabet, so to speak. If you look at the charts, it's been pretty conspicuous as an underperformer. You guys were alluding to it earlier. I think even beyond the sort of rotation out of large cap tech and other growth stocks, Amazon has really struggled here. So I did want to note, this is a 2-year chart, right? So this was a very, very strong run. And on a 2-year basis, it continues to be ahead of the market and tech. But it's also very telling that its all-time peak was 15 months ago. And this is the activity we're seeing right here, not being able to get out of its own way. By the way, also underperforming today, as some other big tech stocks are too. And I think it's relevant to compare it to the various types of stocks and other assets that you would place in the same category. Other retail, such as Walmart, obviously has had, this is a 1 year, had a great run, led the way, outperformed. Amazon up only 3% for the year, S&P 16, and the NASDAQ 100. So clearly, this is flatlining. And the question is it really just digesting slowly that massive run that it had into the September 2018 high, or is there something else going on? A lot of technicians have flagged this as saying, look, it really has to hold above 1,700 or so to kind of keep you away from the idea that there's some kind of a major top in there, guys. So I thought it was the time of year and a moment in the market to point that out.
Interesting. I noticed that usually around Cyber Monday, you would think Amazon would get a pop, but often you see the stock kind of go sideways or actually go down a little bit around Cyber Monday, Dan.
Listen, the numbers are getting big. Next year, they're going to top $300 billion in sales. Most of that is North American retail sales. We know that that margin is very slight. We also know that the company has been investing. One-day shipping has been a huge drag on profitability this year. So Mike just used the term digesting. I think it's digesting a lot of things going on here. And the fact of the matter is the stock is still up pretty considerably on the year. I think there's a lot of investors who would like to see this thing back towards 1,500 to kind of get reloaded in this thing for another growth phase for the next few years.
When you look at a name like Amazon, are you looking at it for the retail operations, for the cloud business, for the potential advertising business growth in the future? How do you evaluate that?
The cloud business, AWS has been the secret sauce, right? That's the thing that has afforded them to do the investments in the retail to make acquisitions like Whole Foods. I suspect that next year you might see another bricks and mortar retail come under the Amazon kind of umbrella here as they kind of think about what logistics look like, what does one-day shipping or picking up or return, all that sort of stuff. So to me, Whole Foods was probably just the start. Maybe it's not 2020, but it probably happens in 2021.
We've got 27 minutes left of trade, nicely higher as we have been throughout all of the session, over 1% of gains for the Dow, S&P, and NASDAQ pretty much 1% higher. Coming up, we've got your last chance trade featuring a very well-known consumer stock.
Plus, former Fed Vice Chairman Don Cohn tells us whether the strong November jobs report means recent economic concerns are being overblown. And as we head to break, here's a quick check on bonds and where the yields are sitting across the board on this Friday afternoon. We talked a lot about it sitting, the 10-year sitting right around 1.8, and it is a touch higher than that now at 1.843%, the 2-year at 1.619. Closing bell back after this.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Pascal gobbles up the rebound and slams it down. Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Ho, ho, ho. Want to make Santa's job a whole lot easier this year? TuneIn Premium is the gift your loved ones can enjoy all year long, featuring commercial-free news from MSNBC, Fox, CNN, and CNBC.
Cyber Monday rolling right along. Adobe Analytics says as of 9 a.m.
Plus music, podcasts, and live sports. TuneIn Premium brings the best in audio to you. Forget the stocking and stuff their phone with the Everything app. Give the gift of TuneIn Premium. Happy holidays.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game. Don't want to miss a second of your NFL team's next matchup? Let TuneIn remind you. Just make sure notifications are enabled on your phone and search for your team profile on the TuneIn app. Then, find the game you want under Events and tap Notify Me. We'll send you an alert as soon as live coverage begins.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Welcome back. Stocks rallying today following a strong November jobs report. Non-farm payrolls numbers for the month coming in at 266,000, beating estimates of 187,000. It's the strong data ahead of next week's Fed meeting, and will that change the possible decision we get next week? For more, let's bring in Don Cohn, former vice chair of the Federal Reserve and senior fellow in the economic studies at the Brookings Institution. Good afternoon to you. Great to see you. What do you feel about this data? Does it change the likelihood of a decision next week, or were we already set for no change in the interest rate?
Well, I think if anything, it reinforces their judgment that they've got policy in a good place, as Chairman Powell says, to support the continued good growth in the economy with very contained inflation. Great jobs growth. They certainly don't need to ease to help the labor market. It's doing great all by itself. And wage growth has been a little higher, but it's not really accelerating despite this very low unemployment rate. And inflation is below their target. So they've got no reason to change, and this will just reinforce their judgment.
As you look at these jobs reports, seeing 266,000 jobs is an awful lot for an economy that has a pretty tight labor market. How much longer can we continue to add jobs at these numbers? And if we start to slow down, do we need to be reminded that that's okay? We're almost here near full employment.
Well, Courtney, I agree with you. I think it's unsustainable to continue at this pace, 200,000 last 3-month average. I think the steady state pace of increase drawn from the demographics of the United States is closer to 100,000. But I would also admit that I've been saying that for some time, and it has been sustained and it has been sustainable, and it hasn't really pushed up inflation. So I think it can't go on forever. At some point, the pressure on worker availability will drive up costs and wages, and that'll feed through to prices. But I think it's going to take a while before we see that.
When you assess the rhetoric from the Fed chair, do you think he is a little too focused on inflation as opposed to unemployment? And either way, do you think it's possible that the next move will be a hike rather than a cut, regardless of how he sees that balance?
Well, I don't see him as focused on one rather than the other, more on one rather than the other. I think their legislative mandate involves both full employment and stable prices, and I haven't noted one versus the other. He has welcomed the very strong labor market that's occurring, bringing people back into the labor force, giving people jobs, helping people particularly in the less skilled end of the labor force. This is great, and not really pushing up inflation. So I don't see him favoring one or the other. So I think they'll live with where they are. Your question about what would be the next move. So I wouldn't anticipate, if I had to submit a dot this year for next year, if I were still back in the saddle at the Fed, I think I would submit unchanged rates for the next year as my best guess of what's going to keep the economy in decent shape. But it's hugely uncertain around that. And I guess if I had to answer your question, I think the next move is more likely to be up than down because of what Courtney was saying about the unsustainable job growth. But I think it's right now, it looks like it's a ways away. And the Fed will want to see some creeping up of inflation towards 2% and maybe even tolerate some movement above 2% in order to make sure inflation expectations are anchored at 2% after this long period of below 2% inflation. So they would welcome some increase in inflation and pressure on the market. So eventually up, but not anytime soon, I think.
Not anytime soon. Steady as she goes, if that was your vote. Donald Cohn, thank you for joining us here today on the Closing Bell on this Jobs Day. Well, coming up next, we've got your last chance trade.
And later, the CEO of Microchip tells us how the trade war with China is impacting his company's bottom line.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
'Tis the season for lights, presents, gingerbread houses, and, most importantly, news. TuneIn has commercial-free news from MSNBC, Fox, CNN, and CNBC with TuneIn Premium.
It's an update to a story we brought you yesterday. It's the toe-to-toe battle.
Starbucks, which almost never gives out anything.
Which is also listed in Syria at about 1 billion.
Let TuneIn spread the holiday cheer all month long. Upgrade to TuneIn Premium today. Ho, ho, ho.
NFL fans, the action continues this weekend on TuneIn Premium.
Wide open the receiver from the 20 to the 10, down the sideline, into the end zone, touchdown.
This Sunday, TuneIn has every NFL football game starting with the Indianapolis Colts at the Tampa Bay Buccaneers at 1 o'clock p.m. Eastern. And closing out Sunday night with the Seahawks at the Los Angeles Rams at 8:20 p.m. Eastern.
Touchdown Carson, easily.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane to the rim, throwing right corner three. Another
TuneIn Premium brings you every minute of the NBA season so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
We have about 16 minutes left to go until that closing bell sounds. But Dan, you have a last chance trade for us. What is it today?
Yeah, so feeling pretty caffeinated. Let's look at Starbucks right here. Back in July when the company reported their fiscal Q3 earnings, they had blowout global same-store sales, 6% better than the 4% expected. And you know what? The stock gapped up 9% that day, but then that spent the next few months selling off. The stock had an 18% peak-to-trough decline. It's kind of bottoming out right here. I think as investors start to position their portfolio for growth again, especially at a reasonable price, Starbucks is not a cheap stock at about 23 times. But to me, this one, I think, makes a run back towards its prior highs near 100 at some point early in the new year. We're going to get earnings from them in late January, but this is one I would start picking at a little bit into year end. You might see this stock move back towards 90 and then 100 early in the new year.
The chart not dissimilar from McDonald's that we discussed earlier.
Very similar. And, the multiples are simple. Here's what's different, though. Starbucks is up 34% of the year. It's not like it's underperforming anything. It's just taken a pause here. And I think it's also interesting to think about that sell-off in the summer coincided with fears of global growth, of tariffs, of nationalistic consumer trends, that sort of thing. China's a huge growth area for them. So you get tariffs out of the way, you get U.S. recession concerns out of the way. I think Starbucks starts to work much better early in 2020.
$6 lattes all around.
Yeah.
Up 2.5% today. Up next, we'll take you inside the market zone for uninterrupted coverage of the final minutes of trading, including a look at one stock that could be a red flag for the broader markets.
At Asda this Christmas, you can save 25% when you buy 6 or more bottles of wine, sparkling wine and champagne. Well, you never know who might pop round. Asda, let's make Christmas extra special. 75 centilitre and 1.5 litre bottles, £4 and above. Excludes gift sets, fortified and meal deal wines. Excludes Scotland and selected petrol stations. Ends 9th of December. Drink aware.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today. Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Hey, TuneIn listeners, Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
Welcome back. We have 11 minutes left of trade. We're now in the closing bell market zone. Commercial-free coverage of all of the action going on into the close.
CNBC senior markets commentator Mike Santoli. He's here to break down the crucial moments of the trading day. And today we've got Dan Nathan. He's still around. Is going to stick with us through the market zone too. Stocks are rallying today on an upbeat November jobs report, despite the sell-off earlier this week. The Dow, the S&P, and the Nasdaq all trading just below record high levels. The levels to watch: 28,164. That's the previous record close for the Dow. 3153 for the S&P 500, and 8705 for the Nasdaq. Dan, what do you make of today's action? Really broad-based, but as we spoke earlier, we hit higher and we stayed there all day long. Sort of investors got exactly what they needed to hear, and we're good enough to sit back and have the rest of the day?
No doubt about it. I mean, listen, again, two of the big headwinds for the market, and this is a stock market with the S&P up 25% of the year that really hasn't had many headwinds, but we get the Fed meeting on December 11th, and we get this tariff deadline on December 15th. You get those things out of the way, or they're just neutral, you have a stock market that's going to close very near the highs. I'll just make one last point about this week, or the sell-off that we've had over the last week or week and a half or so. It was 2.5%. Pretty minor when you consider the sell-offs that we have had from all-time highs over the last 18 months. I think on average they've been about 5 or 6% or so. So this one, pretty muted. It feels broad-based. It feels pretty healthy.
Dan, you've also been taking a look at one stock in particular that you're not so encouraged.
Yeah, I mean, some of you guys who watch the network may know that when everyone's looking one way, I'm sometimes looking the other way. And, it just struck me as yesterday I was looking at Cisco Systems. This is a company that obviously, they have a ton of their sales, 40% or so outside the U.S., emerging markets, enterprise, which is big business, telecoms. And for the second quarter in a row, when they reported, they gave a really downbeat guidance. Look at that chart right there. It's flat on the year. It's down 25% from its 19-year highs made in July. And I think it's important to listen to what that company said about their guidance, about the weakness from the summer months moving into the fall. And that could be a canary in the coal mine when you think about, are we really seeing green shoots? Are we really seeing stabilizing economic data overseas? Follow Cisco. They usually are pointing in the right direction as it relates to order rates around the world.
Helping us watch our blind side.
I'll say it hasn't been a bellwether for a little while now.
Well, but Mike, to push back.
It's a China-exposed stock. Look, there's a lot going on with Cisco, but it hasn't acted as a bellwether.
It has not acted as a bellwether, but I think when you think about what they sell, the nuts and bolts of IT infrastructure, it's a good sense on what governments are doing, what telecoms are doing, and what big business.
But Mike, other tech stocks have also not taken part this week, as we were discussing earlier.
A lot of the big ones have. I mean, look, Apple pops up to a new high. I do think it's more about the consumer cyclicals, industrial cyclicals that are getting more in favor because they were more depressed in financials. But to me, it's not so much about, the hardware sellers. It's much more about just in general, long-term secular growth stocks had their run already.
Now, sound the siren. Breaking news while inside the market zone is from the White House. Eamon has it for us.
Yeah, Wilfred, that's right. Just like the rest of us, the president's been watching the stock market reaction to that huge jobs number we saw this weekend, and you guys have been talking about throughout the day. The president talked about that in the Roosevelt Room just a short time ago. Here's what he said.
The market is 325 points today on great job numbers. The numbers have been phenomenal, actually. Some people said so spot on, so good that they've actually never seen anything like it. That's a long way from when people were rooting for a recession because they thought they could maybe win an election.
And you listen to that and you just get the sense, Wilfred, that 2020 is going to be an election year where those jobs reports every month are going to become a political event again, just the way they were back in 2016. So this one, an important one for this White House, they view it very much as a validation of their economic approach, and you can expect more of the same throughout the year next year, as long as these jobs numbers continue along the same track, Wilfred.
Amen. Thanks so much. Mike, very quickly, we spoke about this yesterday. It is a day where clearly both are moving in the right direction, the same direction.
For sure. Yeah, no, they're in tune right now. Right. I mean, investors want to see the domestic economy speed up from where it's been. Today, we're back at a 2% growth rate for the fourth quarter. That's what the tracking GDP says right now. That's where we've been for a long time. Right now, it comes as a relief. Maybe next year, it'll come as something of a disappointment if stocks are much higher from here. But for now, I think everyone is good with it.
Housing market, of course, a very big part of our economy. And Goldman Sachs is initiating research coverage of 6 home building stocks with a positive sector review. Let's get to Diana Olick. She has the details. Hi, Diana.
Hi, Courtney. Yeah, no surprise, given the housing shortage and low mortgage rates, most are expecting the builders to benefit big time next year. Goldman Sachs notes that although the builder stocks are up an average of 58% year to date, they trade in line with their long-term average at 1.4 times book value. Goldman is highlighting Lennar and Pulte, giving both a buy rating thanks to a pivot to lower-priced homes and cost-cutting. D.R. Horton and Meritage rated as sell as community growth in both of those moderates. And Goldman is initiating KB Home and luxury builder Toll Brothers at a neutral. Back to you guys.
Diana, that's a pretty bullish report. What could be possible headwinds, though, for the housing market? We've had such a healthy market for so long. Any fears that could end soon?
Well, it's all about costs. The builders are just facing really high costs for land, labor, materials, and regulatory compliance. And so it's really hard for them to pivot to that entry-level product. If they can do it, great. But again, they're up against really high costs.
Diana, thank you very much. Now, Alibaba co-founder Jack Ma speaking at the Tokyo Forum earlier today, where he took the opportunity to shower praise on SoftBank CEO Masa Son.
He has a great vision. He believes in the future. He has a passion. He probably has the biggest guts in the world on doing investment. Yeah, right. Very few people in the world have that courage.
Too much guts, sometimes I lose a lot of money.
I know.
I guess courage is one word. You could frame it in all sorts of other directions if you pour money into a hugely loss-making company without really doing much due diligence.
I mean, I think you can obviously kind of honor the big picture vision and the 100-year holding period and everything else that Masa Son always propagates, while also acknowledging that too much capital into bad businesses is not really a formula for long-term success.
Dan, so many people follow these, big individuals' moves and markets. Buffett, Masa Son, very different. But how much do you follow what, he's investing in? And look at the Vision Fund, too, which looks very different so far with this small healthcare, very safe sort of bet.
Yeah, I mean, listen, it seems like every day you see a new massive check written to a money-losing company for something that doesn't make dog walking or whatever the heck it is. And it's coming from SoftBank's Vision Fund, And the fact of the matter is they're out there raising tens of billions more right now. They need to deploy that capital and they need to find ideas. The fact of the matter is there's just not that many great ideas that you can pour that much money in from the get-go and kind of get a return. As we've seen in 2019, when you finally come to the public markets after you're raised billions of dollars in both equity and debt, and that's really going to be the problem going forward. Who will get the return on these investments? It'll be the early investors in the private market.
I love the idea of trying to justify bad performance by saying, but the original vision was great. It just didn't play out that way. And I was really courageous as well along the way. So,
So I'm brave, so
overlook the numbers. Anyway, we've got to get back to the broader markets. S&P's up 0.9%. We've got just over 3 minutes left. Mike, market internals.
Solidly positive, I would say, all day. Not the kind of overwhelming kind of rush to bid up stocks that you would sometimes see. This is the advancing versus declining volume. It's about 3/4 advancing volume. That's great, but that doesn't tell you that all of a sudden you have a tremendous flow of money establishing new aggressive positions. I think it was just a repricing, take back the losses from a week ago and sit there at the highs. We also do have a pretty good number of new 52-week highs in the New York Stock Exchange, 160 of them, or 187 right now. Obviously, that's a very positive number. The volatility index, it has come in, still sitting above 13. When you had a quick little shakeout like we had, down 2%, the option traders aren't going to forget that right away. So yes, we were down below 12 not that long ago. You've rebuilt some premium, bled it away. It starts to look a little bit like we went through in March when we had a little 3% pullback as well, if that's all this is right now.
And you have the sort of perfect sector construct today because you're also getting an energy boost from oil prices. It's like absolutely perfect in terms of the risk-on sentiment.
It is all helping. And I would say not completely without orchestration, too. Everybody kind of buys the stuff that they think should work in this type of environment.
Time to have a check-in on bonds. 2 minutes left of the session. Rick.
You know, the Treasury complex had a real fiery response to the upside in yields after that strong number, but the short end gave most of it back. 2-year note unchanged on the day, up a bit on the week. But look at the intraday 10, definitely popped up to 186, still up 3 on the day at 184, up 6 on the week. You think it was crazy here? Let's look at the gilt, the 10-year in the UK. It followed our markets, went back down, kind of like our short end, but then roared back. Wild day around the globe. Finally, the dollar index intraday chart. Strong session, reversed the 5-day losing streak. Bertha, who would have thought on Monday that Friday would be the third highest NASDAQ close ever?
Yeah, it's pretty interesting here. What we've seen is just that reversal of sentiment over the prospect of trade once again. Apple hitting an all-time high along with Alphabet, but you see the divide here. Amazon is down for the 5th week in 11, while Apple is up for the 10th week in 11. Meantime, chips rebounding strongly, up 1% for the week. Cirrus Logic among those chip makers hitting an all-time high today. And large cap biotech was the real winner, but there were some huge moves among small caps. Denti's one of those that this week got bought out by a Japanese company. That SEMA is a big mover in biotech.
It certainly is, Bertha. The market really finding a sweet spot today. Stronger than expected jobs report, those encouraging comments from China ahead of that tariff deadline on the 15th of December, plus consumer sentiment at a 7-month high. Take a look at shares of 3M, a significant turnaround for the industrial on a report from Bloomberg that it is exploring a $1 billion sale of its drug delivery systems unit. It would appear that the industrial giant is attempting to find ways to free up cash at a time when earnings have disappointed. Nike at a record high, JP Morgan at a new high. To touch on that risk on tone, take a look at gold, down $18 on the day with a Dow off the highs of the day, 28,018, up 337 points. The S&P 500 up 29.
Welcome to the Closing Bell, everyone. I'm Wilfred Frost.
And I'm Courtney Reagan in today for Sarah Eisen, along with Mike Santoli, CNBC Senior Markets Commentator.
Let's check in on how the markets closed today. Higher by about 1.2% on the Dow, S&P up 0.9, NASDAQ up 1% itself. A tiny bit of slippage into the close, but as you can see from that intraday chart on the S&P, healthy gains at the open that were held pretty much throughout the session. 10 out of 11 sectors were higher, led by energy up a full 2%. Only utilities lower, with real estate close behind those yield-sensitive sectors, suffering as we saw a steepening and rising yield curve today off the back of that strong job print.
And joining us to talk about the market day, Dan Nathan, Principal at Risk Reversal Advisors, still with us, along with Dryden Pence. He's joining us today, Chief Investment Officer at Pence Wealth Management. So, Mike, is this the beginning of a Santa Claus rally here into the end of the year, or too early to call that?
It's too early to call that specifically. I do think, though, that the seasonal tailwinds have helped us. Often you get a little bit of choppiness in early December. I still think that the market was hesitant to actually blow up through the highs of last week, simply because you still have that deadline out there, December 15th for tariffs. I'd love to kind of overthink it and say that doesn't really matter. It's not the next thing in front of the windshield of the market, but it is. I do think that the premise of the rally since October is still in place. We probably had a bottoming in the economy. People were too negative, expecting a recession. We got nothing like that. People were too defensive in terms of their positioning, and the Fed had become friendly. All that's still in place, except you need trade to be removed, and then perhaps you'll have no excuses to stand in the way. But by the way, the strict definition of the Santa Claus rally is between Christmas and New Year. So it remains to be seen if we get it.
I wonder how many times you're going to have to point that out between today and Christmas again.
You know, Santa goes back to the North Pole on Christmas, so I don't know why the Santa Claus rallies after Christmas.
There is a similarity to 2017, December into January 2018. There were some headwinds to the market going higher, headwinds to economic growth, that sort of thing. Once we had that trade deal, the tax cut in late December, we just exploded into year end, and then we're up at some point 8% or so in January, followed by a few months sell-off. I think you could be setting up for something very similar, especially if this December 15th trade deadline is just really a push out, or it's just something where they're kind of taking back some of the tariffs that they put on over the last few months. I don't think that's the sort of sustainable thing to get the market going meaningfully higher into 2020 past January.
Mike, to the point of this discussion, do you need to see manufacturing data to improve as well, given just the rally we've had, the multiples we've got? It's not like it's currently pricing in
I think
a recession.
over the coming weeks, you would definitely want to see traction in the global manufacturing numbers, and you want to see that idea that you had a bottoming in industrial activity in the fourth quarter, yes, I think that has to come at some point. But I'm kind of with Dan in the sense that, if you get this kind of all clear type trade, you can just get kind of a rush of relief and money flow into the market. Even up 8% from here wouldn't take you to kind of as precarious a spot as we were in January of 2018.
Dryden, what's your take? Do we need to see better data than we've already seen to get decent gains in 2020?
I don't think so. And the reason why is I think we're underestimating the fact you've got 2.2 million more people working this Christmas than you had last Christmas. We basically, when you take a 3% increase in wages, you take the number of people that have come into the labor force, we have almost $500 billion of additional income in the U.S. economy. That's like growing a country bigger than Ireland in 1 year. So when you think about that, at the end of the year here, Christmas is going to be better than it was. If you got a job, Christmas is better than last year. But moving forward into next year, you have this tremendous incentive. It's $500 billion of additional income people have moving forward into next year that really kind of pushes the economy forward. And so we're positive on it. Obviously, there'll be volatility and some headwinds. That'll be political and other things. But the fundamental underlying piece of this economy is more people are working. They're making more money. They're spending it. The U.S. consumer, the wage and job market is strong, and consumers are in control.
I was just going to say, you're setting this up perfectly for me to ask you about some consumer discretionary names going into this holiday season. It sounds like you sound very positive on the state of the U.S. consumer and their position with their wallet going into Christmas time. Any names there that you like?
Well, the names we like are pretty obvious, but we like Amazon here. When you take a look at e-commerce, it was up 19% over Black Friday and the days after that. So Amazon's dominant there. We like Visa and MasterCard. They get a piece out of every transaction, 85% of the market in the U.S., 96% in Europe. We like Disney a lot because they've really kind of gotten their strength into this, not only streaming, but content. And we think Walmart is beginning to really move forward in the e-commerce area, and they're seeing some improvement there. And 25% of the United States buys their groceries at Walmart. So those are the names we like that are consumer-based, moving forward into the end of the year and moving forward as we get into next year as well.
Now, National Economic Council Director Larry Kudlow was on CNBC earlier today, where he offered some encouraging words on the progress of a potential trade deal with China. But his assurances sounded quite familiar to those he's made in the past.
I can't speak specifically on the remaining issues, but the reality is constructive talks, almost daily talks. We are, in fact, close.
As you noted, he said we are close to reaching a phase one deal. I'm reading from his speech. It could happen soon, but it must be a good deal. There's a lot of momentum, and there's agreement on both sides.
I heard this from Larry, from other members, of course, of the economic team at the White House. Mike, the key thing for the market is we're away from thinking that we're about to get worse again, and there's hope that December 15th tariffs are going to play.
Yeah, and I think that is the binary issue is, do we get a new round of tariffs or not? From the market's point of view, it's not about, hey, let's make sure we have our long-term agreements in place. No. For the immediate purposes of the market, it's just about the 15th. And I do think the fact that the market this week kind of, again, I looked on the bright side a little bit and did not take, I mean, honestly, when the market sold off on Tuesday, I guess it was, when the president had the word about maybe it's better to wait till after the election to have a deal, honestly, it sounded like just one of his conversational kind of switchbacks as opposed to a new statement of policy. And so the market didn't want to look past that immediately, but eventually I think all the other signals are they're looking for a way out of this.
Dryden, how much of a cap right now is on the market with this waiting game between will there be tariffs and will there not be tariffs, in your opinion? If there is not on December 15th, what is the possibility of going higher and to what degree going into year end?
Well, I think you're seeing all of these issues roll off. The Fed was on there for a while. Now, naturally, trade is probably the only one that's left. So what'll happen is if we get past this, and we may have some integral volatility, but as we get past this, then I don't think there's much holding the market back to having, a bit more of a positive move into next year. And that will be good. And then we'll see whether there's some tax selling after the first of the year. People are going to wait and move their taxes into next year. So you might get some early volatility in January. But again, this China thing is moving towards a good place for the United States. And phase one will look like something good will happen.
We're going to send it over to Seema Modi. She's got a look at this week's biggest movers for us. Hi, Seema.
Hey, Court. So a rough start to the week, but we did manage to end fractionally higher on the S&P, led by Ulta Beauty. Really strong earnings, a Q4 guide that was much higher than what the street all anticipated. And Expedia, check it out, shares up 6% this week following a dramatic management shakeup. CEO and CFO ousted by the board. Energy, the best performing sector this week, thanks to a 7% pop in oil prices following a production cut from OPEC. Anticipation also building ahead of the Saudi Aramco IPO next week, the largest offering on record. But with those higher oil prices comes United Southwest Airlines down about 2 to 4%. Next week, guys, a lot on the international agenda that could potentially move stocks. We have the Fed, the ECB policy meetings, the UK election wills, and that looming tariff deadline on the 15th. Back to you guys.
Seema, I'm well aware of that. But
are you?
But I do think, actually, Seema, thank you very much, that there is so much coming next week, Mike, and we're at, a strong performance as we close out the week. I wonder whether there's not enough priced in for the potential for one of those events to go against what the market's expecting.
Arguably, yes. I mean, we keep talking about how we had this little 2 to 3% shakeout from a high. It was not enough in depth or in duration to really get everybody back on their heels and reset sentiment and get a lot of refreshed value in the market. So if we need that, if one of these events comes along from an unexpected direction, could we get something like that? Could we go back to this week's lows and just to see if they were for real? Sure. But I don't know that necessarily the market right now is completely priced for a perfect scenario either.
Dan, sorry.
I was like, before we let you go, I just want to know, I'm wondering as well, are you too optimistic about everything going our direction? And is that a worrisome spot to be in case one of these does fall out of the
Well, I think Mike makes a lot of really good points about sentiment right now. It doesn't seem like there's much that is going to shake investors' fears one way or another. And I think that it seems like everyone's convinced that a phase one deal is in the cards here. But a phase one deal is really a meaningful push out of phase two and phase three that do not happen in 2020 before the election. So unless you take back all the tariffs, you're going to have the headwinds of some of the existing tariffs. And I think it's really important to remember, enough of these fake deadlines, enough about creating hundreds of billions of dollars of tariffs out of whole cloth that don't really need to be part of this sort of thing. Because really what phase one is going to do is roll back tariffs that have been put in place over the last few months as they've been weaponized. And they're really not serving the broader good because we will not have a substantive trade deal to kind of focus on the main issues that our two countries are really facing as it comes to economically for some time now.
Dan, Dryden, thank you both very much for joining us. Great to see you.
Thank you very much. Happy to be here.
Up next, find out how damaging Uber's new safety report could be for the stock long term. We're back in 90 seconds.
I'm happy to give you the tour. I love doing it. Hey, Jay.
Feeling sleepy. On the bus home. Feet sore from dancing. Just me and Della. All quiet now. Peaceful. Our stop. Step out into the silence. Just our footsteps. Every shutter down. Traffic lights directing no one. Familiar glow. Step into the warmth. Big Mac and fries.
Over 700 McDonald's open 24 hours. We are awake.
Great music gets people moving. So here's the perfect gift for someone who's always on the go. The highly portable, special edition Bose SoundLink Mini Bluetooth speaker. Now only $149 in the Black Tag gift event at Curry's PC World. Big sound, deep bass, and 6 months free Spotify for great music right through from the Christmas party to the beach party season. Make anyone's Christmas at Curry's PC World. T's and C's.
Forget the cheese basket and socks this holiday season and get the ones you love and even the ones you just kind of like. A subscription to TuneIn Premium. With TuneIn Premium, you'll be giving them the gift they can enjoy all year long. Featuring live NFL, NBA, NHL, and MLB games, commercial-free music, and even podcasts. TuneIn Premium brings the best in audio to you. This year, we're making Santa's job a whole lot easier. So forget the stocking. Stuff their phone with TuneIn Premium. Search Premium to upgrade today.
One stock sitting out the rally today, Uber, the company under pressure after unveiling a grim new safety report. Nearly 6,000 sexual assault cases occurred during rides in the US in 2017 and 2018, as well as 19 fatal physical assaults. But Uber CEO Dara Khosrowshahi believes transparency is putting the company on the right course, tweeting out, quote, "In the long run, we will be a better company for taking this step today because I firmly believe that companies who are open, accountable, and unafraid are ultimately the companies that succeed." Joining us now to discuss is Jason Helfstein, Managing Director of Internet Equity Research at Oppenheimer, and Rohit Kulkarni, Executive Director at NKM Partners. A very good afternoon to you both. Jason, how much of a blow is it that these numbers, not that these numbers are out there, that these events happened at all?
Sure. I mean, obviously, anything is not acceptable. And the headline number will get press attention as it is. However, if you look at as a percentage of trips, it's, kind of infinitesimal, 0.0003. I think that there's also other color. I think half the victims were drivers, and nobody seems to be mentioning that, I think, in kind of the coverage. And they did improve the number of incidents declined from 2018 versus 2017. I think the range was 12 to 26%, depending on how you categorize the violation. I also think what's interesting is if you try to Google, incidents or sexual assault in a New York City taxi, I did this. I found a Wall Street Journal article from 2016 that talked about 14 reported rapes. Yet there's no data for them from the last several years. So I think Uber is actually trying to raise the bar, while this type of data is actually not available in what we'll call competitive transportation alternatives.
Sure, but Jason, I get that there might be worse outcomes occurring in other transport-related routes, stocks, whatever you want to call it, but that doesn't justify it happening for Uber, and Uber is a multi-billion-dollar company, and it is responsible, I guess, for all of these cars in a way that a single taxi owner may just be responsible for themselves. I guess my point is this not going to legitimately attract serious regulatory scrutiny that's going to impact the company until they get the number to zero?
Again, I think if you compared, again, if you were talking about regulation, again, taxis in most metro areas are regulated. What is the comparison? So again, 0 would be an acceptable number in all forms of transportation. 0 is probably not realistic. There are bad actors. I think another news outlet had a story today how the MTA in New York had 11 felons driving for them who kind of got through background checks, right? So we can all acknowledge that you will never be at 0. The question is, this company, because of how they use technology, what can they do to improve it? And if you look at what they've done, 2019 versus 2018, as far as safety features, a number of people working on safety, what you can do in the app, if you feel unsafe, that's dramatically improved. And my sense is when the 2019 numbers come out in 2020, you will see a meaningful improvement.
Roby, not to at all diminish the severity of these numbers, because they are severe, and it definitely sort of gives me a little bit of pause as well. How damaging is this to the company at large when it comes, frankly, to their performance, to the number of riders that will be taking the services in the future? And could this also translate over to Lyft? What is the difference if you're a rider between Lyft and Uber when you hear a report like this?
Go ahead.
Go ahead, Rohit.
Oh, okay. Hey, thank you for having me. And I think no matter how you cut it, this is the numbers are not good. As in, we didn't know about these numbers. Uber is being transparent. That's a great positive step. But no matter how you cut them, the numbers are not good. And that is going to have an effect, spillover effect on Lyft as well. As in, we know that roughly 30 to 40% of the drivers drive for both the companies. So there is that clear mathematical overlap between those two companies. Also, in terms of riders, many people ride both Uber and Lyft as well. So I think there is going to be a pause in many people as to how to use these services. But I think what Uber is doing today is a good, positive first step. It is a first step, but it is positive. There are a few silver linings in the report, as Jason just highlighted, but it's the first step, and I think they are just starting the conversation. Hopefully, a year from now, we'll be at a better place.
Rohit, I agree. The transparency itself must be commended. How big a risk, Rohit, is there of a kind of nuclear reaction from one of the regulators to fully block their operation until they can get these numbers to an acceptable level? And I guess London and a TfL comes to mind as perhaps one regulator that could be closer to taking that sort of action than maybe any of the cities here.
I think as in the spirit of transparency, I think what Uber is saying is we just don't want to be transparent with investment community, but with riders and drivers and the regulators as well. As in, regulators also need to complete the handshake here by saying that, okay, now that you are transparent with us, we will work with you to make sure that you have the technology, you have the infrastructure to ensure that consumers and drivers are protected. I think, again, I'll go back to the first positive step comment. I think the likelihood of them getting blocked is there, but I feel that would be too much of a severe step for any regulator to take.
Gents, we'll leave it there. Thank you both very much, Rohit and Jason. Up next, stocks rallying today after a strong jobs report. Mike Santoli is going to head to the sell trader with a look at what's behind that number.
And later, emotional baggage. The Verge publishing an investigation into allegations of a toxic workplace culture at luggage maker Away. We'll hear from the reporter who broke that story.
As we head out to look at where the markets close today, closing bell. Back in a couple.
Time to toast today's market close. Brought to you by Rémy Martin Cognac Fine Champagne. Team up for excellence.
My name is Baptiste Loiseau. I am the cellar master of Rémy Martin. It takes more than one person to create an exceptional cognac. In fact, there is a whole team with me, working together as one, instilling our passion, our savoir-faire, and our excellence. Together, we continue the legacy of Rémy Martin.
Tomorrow is just waiting to be created, to be reinvented and redefined. And it's those who dare to push the world forward, discover and reshape markets, and embrace the possibilities of data that will reimagine our potential and transform society as we know it. With new ideas and new technology, get there with NASDAQ.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on the planet on a daily basis.
It's more entertaining than any other morning show, but you actually might get some useful information.
The issue is privacy of consumer data.
This is really cool. For me, Squawk Box is breakfast with the most interesting people in the world. You're the best thing in the morning. How's that?
It's a privilege to get to talk to them every day.
Squawk Box, weekday mornings, 6 Eastern. CNBC.
This is Kate. Hey. She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance. But she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
I finally got to start my career, except that I was spending thousands of dollars on interest on my student loans and I needed to refinance. And then I found Credible.com. Within just a few minutes, I had actual rates from lots of lenders. Now I'm saving thousands of dollars, and I'll be out of debt much sooner. And I can focus on my future. It was so easy, I wish I had done it years ago.
Visit Credible.com to see how much you could save on your student loans.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Welcome back to the closing bell. Let's send it over to Mike Santoli. He has his third dashboard of the day. Mike, what do you got?
Court, calling this one frowns become smiles because a couple of sticking points about the labor market that for many years of this expansion, everyone kept pointing out, not so great wage growth at the lower end of the labor market. Things weren't working out so well. Well, take a look at this chart. This is the percentage of prime age workers that are in the labor force, actually that have jobs right now, not just in the labor force. And you see this has been a very steady, steep rise. And what's interesting about the latest number is we basically matched the pre-2007, 2008 recession level. Now, all-time high is right here in the year 2000. So it's another 2 percentage points up. Obviously, probably whatever it is, a couple million jobs you'd have to add to this age group. But it does tell you that we're getting toward a fuller employment situation, even though for many months, a lot of economists had thought we already pretty much were at full employment. So this is showing that the supply of labor is helping out. That's one reason we got that great number. Here's a wage chart that is not just straight up average hourly wages, but it separates things by everybody, but also production and non-supervisory workers. So basically entry level, lower level workers, people who are not managers or executives, that's in orange. That's been stronger, and you've opened up this gap. It's about 3.7% on an annual basis in today's report, and that's something that happens at the end of long expansion. So there are merits to trying to keep an expansion going because you do finally soak up the supply of cheap labor. Here you see that gap also happen at the end of the last expansion. It doesn't mean we're almost over, but it does mean it's a favorable trend at the lower end of the labor market, guys.
Mike, thanks very much for that. Still ahead, Morgan Brennan is at the Reagan National Defense Forum in California. Morgan, what do you got?
Hey, well, first of all, let me just say, anyone who says it never rains here in Southern California is incorrect. It just started raining here. Take a look at this. This is an F-117 Nighthawk. It is going on permanent loan here at the Reagan Presidential Library officially tomorrow. Nickname Unexpected Guest. However, it is one of more than 800 expected guests here at the forum. We've got another one of those guests, the CEO of a major semiconductor company, coming up exclusively right after this break.
The S&P 500